Good morning. Happy Tuesday to you. It is September 26th, 2023. We're going to be streaming stocks, options, futures trading today. Watching the SPY, watching GME, GNS, BBBYQ, AMC, Peloton, Rite Aid, whatever, Fisker. We've got some little pre-market ones. SPY gap down pretty big this morning, like 6.5% or 0.65%. GME's pretty flat. It's right at the top of that resistance, so we'll see here if SPY starts to have a bounce, which I'm kind of expecting. We'll see if GME breaks through that. Very well could. Just have to look out for some formations on the other side of the resistance. Barbecue's down a whole bunch again, 10%, I guess. Not crazy. It did hit 0.68, so 6.5 cents. That's 7.75 now. We're getting back down to that OTC pricing on it. AMC kind of bouncing out of the gap down. Fine. In an upward channel here for now. See if we get some rolling over. They start to form. I've got a little inverse cup we could have here. We'll see. Could be double bottoming with yesterday. We did not begin that move yesterday. It just happened in Fugazi. Break out of this channel and then the move. Excuse me. The info birds is up a bunch. 28%. Is up 0.74. GNS is down 3.25. Still above my stop. Break this channel. I might get puts for little run to the low a day. Especially if this is starting to roll over already. The high here, we'll see. Peloton's up 6.5. That'll be right at VWAP too, so get the VWAP chop there. Yeah, breaking that channel. Got VWAP to contend with. I made a double top up there. Let's see, still in the channel. Hope you guys had a good evening, good rest of your morning. Morning, Bubba. Back into puts. Morning, puts. Morning, CJ Lee. Good smash a like. Appreciate it, CJ. Got a little bit of a late start today. You guys are on it. 4 thumbs up. All done. I don't know if we're gonna get chopped. Being at the lows, I feel like we're should get some continuation. Just don't feel like it's gonna hang out right at this spot very long. Yesterday was volatile, man. Wow. In a range and choppy, but big range and volatile. So GME does kind of have inverse head and shoulders there. Let's see if we can break through and hold above this resistance. I haven't seen it yet, no. Got another test on VWAP. Breaking through VWAP here. I don't want to get the putts. It's too tight of a range for me. I'll let this one go for now. Makes it to low a day. Yeah, looks like a good movie. Yeah, I'm surprised if it didn't make him look good. I haven't heard from him yet about it. There's a break of that channel now. There's basically a low of the day retest. Put in some pre-market levels from yesterday. Here you go, there's your flush. Down 0.82. I guess I should have taken that channel break. Right here. Oh well. The morning, it's choppy and volatile, and I'm fine too. Patient. Oh, that would have been a nice trade. If you could have held through. Swings. news on Rad? Flushing Reno's plus 8%. How are you only up 8%? GNS looks like it's gonna stop me out. Don't do it. Barbecue, 7 cents, 7.8. Osmo. Cosmo's holding up. Cosmo, look at liquor's up 3.5. Don't expect that to last. Nope, no, it's not a cup, you're right. Not an inverse cup. I guess that first channel break would have been a nice grab for puts. But I'm happy to be patient. GME is now red. But we have a head and a shoulder, inverse head and shoulder. Could be a possibility for another shoulder up over here, breaking out of this channel. The long play. Candle and SPY. Doing Dish is down 1% down on Dish. Runs down 1%. Wait. Yeah. See if Run can get a bounce there. Teledoc's flat. Etsy's down 1.6. Space is up 0.7. Rum, dude, this thing is not balanced. It's crazy. Down 0.74. AMC's up 1. Mia's flattening out. Jan's up 1.25, but well below that support, that all-time low. Not great. Oh. If spy breaks the south side of that channel. The final support I have on here is that pre-market low from yesterday. Be interesting if we just kept breaking supports. That would probably start to turn to capitulation. Make it a real bounce. Did break that channel, so more aggressive selling going on. Oh, there's a bounce. So same way, like rolling over as a top. This would be like falling down, falling off. Or if your trend's going to the upside, it's like accelerating. Oh look, real close to that line though. Yep, might have just been a little bounce on port, find some buyers. Let's start with a couple calls here. Grab some on a break of this channel. Nice, Bob. Well done, man. Got an RSI divergence there too on the 5-minute. Wait, maybe not. No, never mind. Get one more call here. Okay. Mullen. Did I put up Mullen? You guys hacked my computer? GME still below that resistance. GNS definitely stopped me there. I think, yeah. Yeah, I got stopped out on GNS. Well, that was kind of a dip buy. Wasn't catching momentum. It still could be in, but I'm out of it for now. Yes, little inverse head and shoulders here on SPY and breaking this channel. See if we can actually break it. Oh, SPY's coming down a little more here. If we get a double bottom. Isker's up 14. Well, we're below. We broke below that low from yesterday. Pre-market. That's interesting. Got this pre-market high back from a month ago. Wait, where are we? That makes more sense. Yeah, because we're way below all those levels. Yeah, still kind of coming down here. Still in this even steeper channel. Didn't double bottom. Pretty ugly. Buys down over 1% now. Wow. Yeah, it's kind of just no man's land down here. We got some more aggressive selling even right here. Well, GME's holding up relatively well. We're down 0.85%. Just melting. I'll wait till we break this channel to average into these calls. And more. GME's down now 1%. I just flushing through supports. That turns out that first initial trade, that's the thing, like I don't like to do it, but sometimes that first trade, beginning of it, this would have been a large move. In the morning I do smaller contracts, so hard to know if I'd have even held one this far. Look at this thing, wow.
it fits in now as a reflation.
Bubba, did you scale out? Do you have any left to sell now? GME is down 1.2. GNS down 5.3. I bouncing there a bit. Waiting for more calls on the break of this channel. Just need to average into them, get out of them potentially. We'll see. Yeah. What's up, Prim? Morning. Solid rejection on GME for that resistance. But it's still kind of on that right shoulder. See if SPY starts to rally here. Gonna be looking for a higher low. If it is a lower low, not as steep as this one. Not down here. Somewhere over here. Then it will start to be rounding out. GME down 1.5 now. Excuse me. AMC up 2.25. AMC at the top of that resistance. See if we can break it. Been pretty disappointed by its rallies out of its huge sell-off. This has basically just been consolidation. Hasn't really had a real rally. There's 3% on AMC. There's 3.3% on AMC.
On the end of the rate cycle. But if rates need to keep going higher, that
Yeah,
will
sounds like
pressure
me.
duration assets, no doubt. Now, we are growth investors, so we don't spend a lot of time looking at what will earnings be over the next year. We are looking at what will earnings be
There's a
in
break
5
on that
to
channel.
10 years.
That's what I
We're
want to see.
long-term growth investors. And so when I lay out that scenario, for instance, with Microsoft being able to double the business on the sale of just AI features,
Get some
in
resistance
Office,
in that next
we
channel
do not
up.
think that that is appreciated, certainly in the next year numbers, but more importantly, appreciated by investors in those 5 and 10 year numbers that we built into our discounted cash flow models. So I would encourage your clients, your viewers, to not be staring at the 1 year revenue or earnings estimates. That's not where the story is here. It's going to be coming here over the next 5 to 10 years. And we think that these stocks are actually expensive when you evaluate them through that lens.
Okay, so certainly on board for the product development and productivity coming from AI. Just real fast, because obviously there is another component to tech, which is a little bit more traditional hardware cyclicality. I think you answered some of this with your expectations of the end of the hike cycle and a soft landing. But for Apple and sales of the new iPhone, how big of a determining factor for tech is that? Because people bought Apple the last year as almost like a safety trade during times of uncertainty.
Yeah, Apple certainly did well during COVID as customers bought iPads, Macs, certainly iPhones. They used the capital that they were being given from governments to do so. They were stuck at home, needed these devices more. So Apple has been grinding through some of that pull ahead of demand. We think they are largely through that now. And ultimately, we think that the cycles that lie ahead are going to be a lot more predictable. But Apple still has a tremendous opportunity in services, capabilities sold around their hardware platform, in financial services, in healthcare, maybe eventually in automotive. So we're certainly positive on that.
Automotive.
We are watching closely developments in China.
I forgot about all that.
Represents roughly 20% of the business. Certainly the Chinese government is applying pressure to government workers that are trying to bring iPhones into the office, state-owned enterprise workers who are trying to bring iPhones into the office. And so that that does create some risk. And then certainly Apple is seeking to diversify their supply chain, and that creates some potential cost headwinds as they seek to globalize their supply chain and their manufacturing base.
All right, thanks for the analysis and case certainly well argued. Jonathan, we'll be in touch. Appreciate it.
Great, thank you.
I'm back up in this channel now. See if we get it VWAP.
All right, there's your
I was waiting for a little pullback to the bottom of this buying channel we got going on, but to get more calls, we'll see. Otherwise, I'll get more at the break of this larger channel we had this morning.
ETFs tracking the bond market have been under pressure, of course. We'll be right back.
We've got a shoulder here, we've got a head here, build another shoulder over there. But if we reject here, we also have a little shoulder down here and a head, so look for a shoulder on a channel break. AMC up 2.5. Just above that resistance, see if we can hold. Is he buying it? No. I mean, I don't know what he's doing. I don't think he takes big enough positions to move a stock like this. Especially with, yeah. But that doesn't mean he's buying it either because he said he likes it. I'm picking up another call here. Hopefully continues to respect this channel. AMC back below that resistance. Not great. Still back in this wedge. Back in its cheese wedge. GME down 2.3 now. Slowly climbing back up a little bit. VWAP's pretty low. Barbecue down 13. 7.5 cents.
Stocks and bonds selling off together. We've generally seen some relief from that, of course, but now we're kind of wondering if it's going to come back into play over the last couple months. Do any of these funds show a particular unique relationship to stocks? Like, which do the best job hedging equities in today's environment?
Yeah, and this is where it gets interesting, and it depends on investors' risk preferences. So, traditionally, long term, the hedge against equity risk exposure would be long duration treasuries. So think TLT. Now, that's a little bit hard for a lot of investors to stomach right now with the volatility that's happening in the market. But long term, that's traditionally been the hedge for equity. So investors will balance out across that duration spectrum. Some investors may recognize that that's the right hedge, but may not be comfortable right now going that far out. So they may, hold something in the middle, sort of intermediate term, or just, again, holding something high quality and durable like AGG, which is treasuries, corporates, and agency mortgages.
Got it. Steve, thanks as always for the rundown on what you're seeing. Great insight.
Thanks, Oliver.
Thank you. Steve Lampley, Global Co-Head of iShares Fixed Income ETFs at BlackRock. When we come back, let's go into the charts. Let's get technical with a couple restaurants, Wingstop and Domino's. We're going to look at them next. Stick around.
That little thing. What's up, Maui? Any predictions for barbecue GME? GME is still projecting this resistance, so still in a downtrend for sure. We'll see if the SPY, if we get a big bounce, if it wakes GME up a bit and breaks it out. Otherwise, we're probably going to see 16, 18 again, and maybe 15 levels, as it just continues to respect that resistance line. Barbecue, it's probably going back to OTC pricing when it entered. It was 4 cents, and maybe down into the fractions of a penny. I'm not sure, but it's also in a downtrend. Pretty aggressive one. There's VWAP on SPY. See if we build up a right shoulder over here, right inverse shoulder. I'll be getting some more calls. There's a break of VWAP for SPY. There you go. Top of the channel. Sell one up here. That rejection on the top of that channel, like perfectly. Start to form some support in the bottom of this channel. I'll get back into a call or two here. Grabbing another call there. Oh, we start to break here. I'll probably stop out of them. Weird. Yeah, I'm out. Could have gotten put at the top of the channel, but I wasn't. I was still trying to just get out of my calls. Well. Oh, wait. Five minutes. 7 minutes to 11 o'clock. Deep Spy holds this selling channel. Look for some more calls, on the bottom. GME down 2.5.
Also came in a little bit light. I mean, tomorrow we got durables and then GDP jobless, though, and then, of course, inflation Friday. That's the stuff that's going to move, bonds, right? I mean,
the long-term bond. So if you want to look for, if you're a bond fund, if you're a bond holder and you're looking to hedge your risk, you're not risking to the upside, you're risking to the downside. So I
grab a call there.
The continued pressure higher in rates it's going to continue, and we very well could have another 50 basis points higher in 10-year note. That's a significant.
well, Neil Kashkari yesterday, late report came out that he sees another hike for this year, and he has been a little bit of the hawk representing the Fed now, Nick, but that has generally been the right person to listen to, actually, as, we lost Bullard.
Yeah, you certainly can't look the other way on that. And you already mentioned the data on Friday, but look at what's happening, kind of across the lesser watched data points. The Case-Shiller Home Index is out this morning and up, 0.3%. Not a huge move, but from being down last month, and home prices are up 3% on the year, right? Talk about inflation and all this is under control, and the Fed's going to look the other way on oil, but housing is up, right? Oil's up. We've been saying this now for, I feel like every show in some form we talk about, the data's not really showing this last mile of inflation getting under control quickly. And I think you have to take that very seriously. I mean, we're better than we were, but we're still actually inflating, right? We're not in a deflationary stance here. And I think the Fed's very concerned about that. Yes, it's restrictive, but prices are still going up. So I think until we start to see big changes in wages and people's ability to spend, and you are seeing
I'm building the head and shoulders here.
It's a little bit concerning to see
Normal one.
Little kind of upticks quietly in inflation on these lesser watch numbers. So it'll be fascinating to see how it goes on Friday.
Yeah. All right.
Oh, we are just in this channel still.
Markets trying to hold the lows of the day right now. Nice description of the action, Dan Grant, Nick Diarankis. Thanks, guys. Trading 360 with Nicole Petalides is coming up next. I will see you this afternoon, 2 p.m. Market on close. Don't miss it.
I'm slowly getting back into calls. Slowly. But looking at it, all the volume came in on the selling, so we might not be getting a break to the upside today. I'm gonna have a tight stop on these. Head and shoulders. Yeah, I'm out of those. Look at puts. GME down 2.65. Wow, look at that candle wake up. That was weird. Oh, we just had data maybe? 11 o'clock? Not even 11 yet. That was weird. SPY. So choppy. I don't know what woke up there, but climbing back up with volume. I don't know what came out. It seems like data, but it was like at 10:59. Maybe it got leaked. Oh no, but I just got whipsawed. Lucky. Cosmo's up 7.5. Kramer's at it again. After some consolidation. GME down almost 3 now. I see the inverse head and shoulders here, but yeah, probably closing the puts if we hit the bottom of this channel again. I'll be flipping back into calls if we break to the top of it. I want to see if we get to the bottom of the channel, what happens. Bounce on there, a flush through there, or what? AMC up on the resistance again. Head and shoulders right here. Yeah, there's a head and shoulders, there's an inverse head and shoulders. Got it all. That's just the nature of chop. Gonna break the range now. It's an ugly day really for trading. Didn't really set up much patterns at all, just yeah. Not very favorable. Okay, SPY's coming down some there. If it bounces on this, breaks through. Or if we just keep chopping. It is 11 o'clock. Couple broke 174. Out of your calls. But yeah. Yeah, I mean we're below the pretty major support there. I mean, one day is one thing to be below it and then bounce. But the gap down and then selling off, kind of interesting. Yeah, no, I see a bounce coming on SPY before we hit 420. I mean, the bears need to build some liquidity for this drop. Like, the bounce is going to be aggressive. Yeah, I mean, if we just drop that, that would be probably capitulation. Just flat out selling, scared selling, panic selling, without a pretty good size bounce. I'm hating Fidelity. Need to transfer. Fine, coming down some more. 11:15. You got 15 minutes to EU close. Got 9 likes on the board. Thanks, guys.
red candle here. And you can see that we are starting to transition from kind of a downward slope to a sideways slope in our moving averages, but our shortest term one, our yellow 21-day, once again starting to trend downward here. So a sign that the trend is worsening a little bit. RSI also supports this. We're seeing a move below the 50 midline in the RSI that separates bearish momentum from bullish momentum, so now we're moving toward the bearish side of things here. However, we've still got this $87 mark to kind of hold on to here. That's our support point to watch. If we start getting too far below that, that might be a sign that really the trend is starting to worsen to the downside here. But for right now, look for the moving averages to provide some resistance. Our nearest one is the 21-day, just above the 90 level.
Yeah, understood. I think, you know, as you talked about that downward trend, and that's a little bit nerve-wracking. You know, the RSI made that turn Achilles, as Rick pointed out on the charts. Where do you think this is headed? What kind of upside do you see?
We're seeing a very limited upside at this particular point. We're looking at 5 to 8% in the next 18 months.
Okay.
So nothing out of this world. But given the rate increases that they did in the summer and that winter is coming, not to quote Game of Thrones, but winter is coming,
right,
and we're going to see increased usage amongst their customers, we see them benefiting from that, and the next few quarters should look pretty good for them.
All right. Next up, one of the Magnificent Seven. I mean, before I get to Microsoft specifically, how do you feel about the Magnificent Seven? Are there some of the names that you would more likely buy than others? Which ones?
I think we're leaning towards Microsoft a lot, but there are several high-quality names there. We think that once a dominator in the industry and part of the new technologies, you definitely want to be aboard with those companies, as they can be very fruitful going forward.
All right, so tell us more about Microsoft, which is, it also is off its 366 high, but has certainly been a winner. It's still up about 30%.
Yeah, well, Microsoft, we're looking at the AI technology. We think that that is the future of the company. They're very forward-thinking in that sense. They're looking at hiring a nuclear engineer to come in, because computing in AI takes a lot of energy, so they're going to need nuclear mini reactors in the journal the other day. So that's one part of it.
Yeah.
We feel that this is a future component to the company that is going to raise their monies, and at the same time, we're looking about 18 to 22% in 18 months. We think that the double-digit increases are not far off, and we feel that that's actually on the conservative side, Nicole.
Right, all right, so looking for 18 to 20%. Rick, this name has come off of its highs. Your thoughts?
Certainly. Another move down from the highs here, a similar type to our last chart here. We had our yearly highs near 366. We had a test of support after we had the decline here. This time was near about 313, 314 or so. You can see that was our old low close. We established it once again there. Then we rose upward. This time the resistance was in the form of a volume node near about the 335 level. So you can see that these highs give us our downward sloping trend line here, but like our last chart, things have worsened a little bit. We've traveled below our moving averages, our yellow 21-day and orange 63-day. The moving averages themselves are starting to slope downward. The faster moving average is crossing below the slower one. Not the greatest trading signal to operate on itself, but it's a sign of the trend worsening a little bit to the downside. Now today, we're falling farther than the overall market. We're down almost 2% on the day, and we're breaking through that 313.85 level that represented our old worst close here. Now, we can also see RSI, our measure of momentum, making a lower low along with price here. So we are trending lower,
coming down
but
some.
we're away from the oversold area still. We're not quite there yet. So that could be a point that could be really worth noting here, especially if we get down a little bit lower. This other volume node near the 310 level, right about there, if we get to that point and we find some support,
If
that
you get a
could
bounce
be
on low day.
place to look for a bounce here, especially if we kind of dip into that oversold area. That could be a sign that things are getting stretched too thin. And RSI is nuanced. You know, it could be a sign of that things are getting stretched too thin. It could also be a sign of the downtrend accelerating here. So it's really important to see if that happens. If we do break into oversold and break below support at the same time, that could be a bad sign. If that does happen, check out here. The 252-day exponential moving average comes in right around the 300 mark. That could be the place to look for some further support if things continue to worsen. To the upside right here, we've got our moving average confluence right around the 325 level. And I wanted to point out one quick other thing as well. If we zoom in on this chart a little bit here, you can see we had two bearish engulfing candles in a row. We had this one that formed there, the real body, completely encompassing the previous day's real body. You can see we had another one there. Not really a good sign when you have two of those in a row. You know, a more bearish candle pattern, obviously.
Yeah, I see all the down arrows here, and just when it tries to give it a go, it just really, it's not going at this time. But you do feel optimistic. And look, it's a market too that has had this time traditionally is a tougher time of the market, right? August, September, October. Any quick final thought on Microsoft?
Yeah, just real quick, you know, just remember that we're thinking of this stock for the future. We're not thinking of it right now. Going to face a lot of near-term resistance, but the stock long-term is a winner.
Right. Okay. Up next, another dividend payer, right? And it was under some scrutiny for a while when they started to bring it down. AT&T, which year to date is down 19%. Achilles, you like this one?
Yeah. You know, I'm looking at this as a turnaround target at this particular point.
Okay.
We don't think it's going to go up tomorrow. We're going to face a little bit more resistance.
GME is down 3% now.
I would not be surprised if it hits those 13 levels again.
Barbecue
and we'll
down
pick up that stock simply
17.
because $13.
So if it goes down to 13, because right now it's at $14.95.
Correct.
So when it gets in the $13 range, a good time to pick it up.
We'll pick it up now just because it's quality and we want to own it in the portfolio.
Right.
But we see this going easily to the 16 to 20 range in an 18-month time period, simply because there's a lot of compelling reason. You know, we have a lot of people who are in their contracts for the new Apple phones, and if they want to upgrade, they stay there. They're not going anywhere, and they're loyal Apple base.
Right.
So that's one part. The second part is
You
the
close in
dividend
3
yield.
minutes.
Now, I had made a mistake before. I said Con Edison was at 7%. They're actually 3.9%. But AT&T is at 7.4%.
Oh, I see. Okay.
And the question is, can they sustain it? You know, at this particular point, that's going to stay there for now.
Understood.
And it may actually go a little bit higher. The next thing that I would recommend is that this particular stock, as a turnaround target, you're going to have anywhere between a 5 to 12% move to the upside, but you're going to have to be patient. This is not something that's going to happen overnight, and if you have patience, you will be rewarded for it.
Right, and look, as you noted, the iPhone 15 could be a catalyst here as people renew their subscriptions for their phone lines. Rick DeCat, take a look at AT&T chart, please.
Trending downward from March to August here, you can see this blue dash trend line marking the spot where we failed to take out those previous highs from earlier in the year.
I'm melting down more here.
Then we've broken beyond that trend line here.
I don't have
We've been
patience on my
trending
puts.
upward off those yearly
I don't
lows
like
near
the price action, I like the
We're
chop.
up about 11.5% from that point.
Lack
But the
of
situation is a little complicated here
patterns.
because we have this upward
Here comes
trend
a
line.
low of
but,
day.
if we try to go across the highs, we get a broadening triangle type trading pattern here, typically regarded as a more
there's a
difficult
little
pattern
flush
to
through
trade
low
because your
day.
two targets are continually moving apart from each other. It suggests kind of a lack of clear boundaries, a lack of clear trend here. We are crossing above our yellow 21-day and orange 63-day moving averages today. We're also crossing above the $15 mark. We were rather. We've slipped below it by about 3 cents right now. So that would be an important area right here, because we've got our 63-day EMA lining up right with that $15 mark, so it's giving us a confluence of resistance to watch. The more indicators and trend lines and support and resistance levels line up at the same point, the greater weight that price level has. So this could be an important important pivot area to
Only
watch
11:30 though.
as we head into
Got
the
hours
close
of
today.
potential
Momentum is
chop.
still favoring the bulls, though.
Price action,
we
I
didn't
guess.
quite make it to the overbought area, but we are above that 50
See if SPY
mid
holds
line
this
still.
channel, though.
That would be concerning if we failed to break above resistance and momentum crossed
Starting to
over
flush
that
through there,
midline
wow.
here, but that hasn't happened quite yet. So, you know, if you're bullish, you'd want to clear above that 15 level. You'd want to keep going up to the 16 mark. That represents the old highs that we saw from this short trading range here. That red dashed line there also roughly coincides pretty close to the upper boundary of our broadening triangle here. Now, you can see as well, if we were to cross above that point, we've got our 252-day EMA and a volume node just below 17 there, so that could be an interesting target to watch to the downside. The old lows, that's the real danger point there, 1343. If we break to the downside, there's not really a whole lot to potentially stop us beyond these lows right here. You know, those are two potential areas to watch around 1343.
GME's down 3 1/4.
Got it. Rick, thank you for all of those great charts today. We do appreciate it.
I mean, SPY's down 1 1/4. Pretty big day so far.
Yeah, there's going to be a lot of mess before it gets better. This is the time of year that it tends to happen. You know, a lot of sales are occurring right now. Mutual funds and hedge funds are starting to sell, declare their losses for the year or gains. But we want to make sure that we're in the high quality, so that flight to quality is important at time.
Yeah, Achilles Larea, thank you for being here for the Big Three. Of course, our own Rick Ducat on the charts. Achilles Larea of Larea Wealth Management. Some great names to watch there. Coming up next, we're going to spotlight Costco ahead of the earnings. The stock's been a winner. It's up more than 20% this year. We'll get you ready for that.
And we had that kind of head and shoulders there. I don't know. Here could be setting up an RSI divergence. My last horizontal support right here. 426.52. The highs from 6.566 3 months ago. Picking up another call. And another one. And another one. Remember how I was saying another low, but not as low? Right here. I guess we kind of are on that same one. But yeah, from this more aggressive one, we've made a lower low, but it's not as steep. Not down here. So starting to round out that bottom maybe.
So there are some bright spots there. The one headwind, though, would be wage inflation. That's been a continued headwind for Costco. But I think what investors will be keeping an eye on or looking out for is really two things. One is when Costco will raise its membership fees. Last time it raised membership fees was in June 2017. It typically raises it every 5 to 6 years. So we think a membership fee increase could be imminent. It's just really a matter of when, not if, they'll raise membership fees. And then the other catalyst for Costco, we think, is a special cash dividend. It historically has paid these special cash dividends. Last one was in December of 2020 of $10 a share. And right now, Costco is flush with cash. And so we think a special cash dividend could also be imminent for Costco.
Oh, so we'll watch for that. If they were to raise the fee from the current price, do you think there will be any backlash or people will be less interested?
Break this channel, I'll average up on my calls.
Amazon raises its fees for Prime. Netflix has raised its fees for streaming. How do you think it'll be received, and how much do you think the bump in the fee could be?
If it does raise its fees, it'll likely be between $5 to $10 of fee increase, consistent with historical fee increases. But in terms of the reception to a fee increase, we think Costco has significant pricing power. Its membership renewal rates in the United States and Canada is 93%, and then worldwide its renewal rates are about 91%. So it's tremendous customer loyalty. It's Costco spent decades building shopper loyalty. It clearly has a very positive perception in terms of value, convenience. So we do think Costco can raise membership fees.
Love Costco.
If it does, or when it does raise membership fees, it's not going to fully flow to the bottom line, because what Costco tends to do is if they raise membership fees, they'll reinvest some of that into the business, mainly in the form of prices. So Costco could raise membership fees. And
all right, use close. Thanks, guys, for your likes.
In order to drive
9 likes today.
Traffic and members to come back to
9, that's right, single digits.
So it'll be a positive for customers. It'll likely be a positive for investors as well, because some of it will flow to the bottom line. So it's really I think a win-win situation.
This really goes into the consumer staples category, because some of the things that they sell there, granted some of it's discretionary and some of it's just fun and exciting, but there's a lot of staples in this one. And it's a retail type name. What other names in the competitive space do you also like? And you have a hold rating on this one, right?
Yeah, for Costco, we have a hold, and that's mainly due to the valuation. It trades about 35 times forward PE. Which is a bit expensive in retail. The company that we like in retail right now is really Walmart. Walmart's trading at a much more reasonable valuation, about 23, 24 times of a forward PE. Walmart shares have also underperformed Costco shares this year. Walmart's only up about 15% this year. Costco's up about 20%. And I can't argue that longer term, Walmart could see stronger long-term growth than Costco. So we do like Walmart shares right now. We think Walmart would be a great investment, not just this year, but over the next 3 to 5 years. And that's why we have a buy on Walmart, but a hold on Costco.
All right. Arun Sundaram, thank you for all of that of CFRA Research.
Thanks, Cats.
For Costco, and now we know you have Walmart as a buy as well. Thank you.
You may get a little green candle there with SPY.
Coming up next, Disruptors. George Stillis is standing by, and he'll take a look at
selling one of these calls.
An analyst call, an upgrade to be specific. So the sports gaming name next.
My dad was a hard worker.
So another one. Little head and shoulders there. This could have been a handle formed on this inverse cup. Didn't make it to the top of the channel though. That's what I was hoping for. At the least. Or a break. Excuse me. Watch one live stream, get one free. I don't think I have that yet. Yeah, you help your girl move. Market's been pretty choppy this morning. Like, it's been selling off, but I mean, it's pretty choppy. Not as nice of trading as last. I guess yesterday was choppy, but it was more defined. What was the H and GME put here? You were long or short? Oh yeah, GME just rejected that resistance. I mean, SPY's been coming down too. It's down over 1%, so. I mean, yeah, it was getting close to, this morning it was getting close to that, right on that resistance, so. There's a pretty clear rejection, I think. That SPY's coming up. Closed out of a couple of my calls. I didn't. This little head and shoulders being built here in the middle of the channel. Let's see. Like I said, I'll still get into more if we break above this. Pretty long. Long the 17 put. I don't like the risk to reward taking puts here. But that being said, I didn't like it up here either. Broke that channel. That was like a whole percent ago on SPY. Nice guts, well done, man. Was it? Small movement that size? I know, yeah, the GME options suck. They really do. Yeah, I just flipped out of my last call. We'll see. I got some puts. Again, I don't like the risk reward here, but I didn't this morning either. The high of the day, so always go lower, can always go higher. Take profit at low of the day. Or just take profit rather. This is what happened before to me. Literally the exact same thing. Flipped out of calls, went to puts. We had that massive green candle. Or was that? Right here. Wasn't massive, but a lot of volume green and
but sales, which is a smaller division, was down a little bit year over year, but that's against a very big comp. That business has been booming the last 2 years. That's all I can find. I think it was just a very good quarter. It appears to be some profit taking, clearly.
Right. And, I feel like, Rebecca, that Cintas sort of has a good corner on this. I don't know if it's necessarily a moat, but really has the corner on these uniforms. I know they do other stuff as well, cleaning products and more. Your thoughts on Cintas today?
Yeah.
Well, I agree with Scott.
It seemed like that for a while,
agree that
BJ.
This is
yeah,
a beat on
haven't gotten it
revenue,
yet.
A beat on EPS. So why the market is coming down 4% almost? It's a big market cap difference too. It's 51 to 49 billion, so it's quite large. I don't know, Nicole. Maybe people are starting to price in that we are maybe looking at a second half of our fourth quarter beginning of contraction, and so less labor tightness, less uniforms to be ordered.
We'll probably see a new low first, though, or at least a test of this low.
And certainly that has helped when there's pandemics and outbreaks and those kinds of things. So going into fall season here, they'll probably do better with that. It's very surprising that they're down 4%. It must be overall market performance.
Right, understood. And when we look at the overall beat on the bottom line, people seem to be very happy about that, Scott. What's your outlook for this type of company? I mentioned that they really do have a really good chunk of market share when it comes to the uniforms, and they're growing some of those other, medical, cleaning, health supplies and things. But it seems, I mean, that the uniforms and such, the rentals and sales are still the biggest part of things, I believe. Your thoughts on how this company does going forward?
Yeah, everything's going very, very well. They, there's been some strong pricing with it, covering inflationary costs, and I think that's still in the right place. They called out that it was volume and new business wins that are driving the top line, and they say that still looks good. So it's looking very nice there, and the margin continues to expand. They expect this fiscal year, this is just the fiscal first quarter, they expect this fiscal year some margin expansion, and they're off to a very good start on that front, doing a lot of work internally on improving efficiencies, optimizing their routing, their facilities. So there's really a lot to like here. It's interesting competitively. They have one other large publicly traded competitor. There's going to be another publicly traded competitor starting to trade in coming days, spinning off from another public company. So perhaps that has something to tie into the stock action today. But yeah, there's really a lot to like here at Cintas.
Understood. And as we take a look at this group overall, you think about what are these uniforms used for? You think about business spending. We have tightening credit conditions overall. Yeah. Households are going to have to, clip the purses a little bit. And business spending is, something that was of concern to Fed Chair Jay Powell, right?
100%. Yeah, Nicole, you hit the head on the head when you said that uniforms are still over 80% of their revenue. So all the other lines of business are definitely growth phases. Right. And, I just think that with inflation and the Fed still being so hawkish in their statements last week, even though we paused and we held, they're still very hawkish, and their guidance was revised to be more hawkish, and that we might have to be higher for longer or even have additional raise, which I am expecting. October 31, November 1, we have one more raise. I am.
I see.
And I think that, just remember, Cintas has a 35 forward PE, so it's a lot of pressure for our company to keep bringing these margins. And that always is going to put pressure on future guidance.
Yeah, understood. Your thoughts, Scott? I mean, I know you mentioned the tax rate guidance. Tell me a little bit about that. Does that, you have it in your note, matters at least a little bit, right?
Yeah, that was nothing new, though, from their guidance that they provided on the fiscal fourth quarter, that it's going to be a bit of a headwind this year. So I don't think that's disruptive today. It is, though, a little bit higher year over year, and perhaps they can work that down over the year. We'll see how that plays out. But yeah, I think it's interesting, the point on the PE. It really is I wouldn't say price to perfection. It's a company that merits the very elevated multiple that it receives. And so I think sometimes you need to be blemish free to move higher. But yeah, I don't think that the tax rate should be much of playing into today's trading.
All right. Well, they did nudge that full year numbers higher. It has still been a winner, up about 24% for 1 year. Thank you both, Rebecca Walter of Walter Wealth Management, Scott Schneeberger of Oppenheimer. Thank you both for being with me here on Trading 360. I'm Nicole Petalides, live every day, 11 a.m. and 2 p.m. right here on Schwab Network.
Hi. Just in this level here, if we get a little break into low of the day. Green candle, starting to wake up a little bit. It's coming up on 12 o'clock. Any data today? That was weird at like 11:10:59. That huge volume and rip. Let's see. Nothing at 12. 1:30. Bowman starts speaking. Yeah, we knew home sales at 10. Looks like that information got leaked. Maybe. No, that was later. Good call, CJ. Yeah, I'm ready to get out of these puts. Done very well today so far. If I'd fully exited there, it would have been better. If we break here, I'm flipping back into calls. I like to close my puts down here first, though.
And option strategies in cloud and AI companies. Salesforce slipped over 7% so far this month, and Broadcom, which hit an all-time high at the end of August, but is now down 11% in September. And like Folio, break down consumer sentiment data on Costco, which has rallied over 20% so far this year into earnings after the close. Now, 2.5 hours into the trading day, stocks are selling off with the S&P 500 hitting its lowest level since early June after the latest home sales and consumer confidence reports disappointed expectations. Conference Board's Consumer Confidence Index fell to 103 in September, down from 108.7 in August. The expectations index tumbled also below levels that observers may associate with recessions. Now let's take a look at the four major indices. The S&P 500 down nearly 1.2%. The Dow Industrials off over 300 points, or nearly 1%. The NASDAQ 100 leading to the downside, down 1.3%. And the Russell 2000 outperforming today, still down 6.5% in September, but down just over 0.5% in today's session. To help me break down this market action, let's bring in my co-host, and that's Kevin Hinks. Kevin, that did not, we were on the Future Show earlier today, modestly lower. We get some data points out, and boom, here comes the weakness once again here in September.
Consumer confidence, pretty big miss, but a nice revision to last month's up to 8.7. Right. But today, a pretty big miss. And think about it.
Think about it.
In a month where, you know, the S&P 500 has gone from, what was my number, 4507? 4507 it started August 31st.
All of rejection.
So pretty significant sell-off. Not really surprising that consumer confidence would take a little hit there.
Right.
I'd actually be surprised if it was the opposite way. So all things considered, September, as we know it in our history, playing out as expected here. So a lot of people, I really want to see, I thought the opening sell-off in futures overnight was tied to the foreign markets. Let's see if that plays out throughout the day. Because if we get any kind of dip buying here, maybe it'll come the second half of the day. But 1%, 1.2%, the Russell only down 0.5%. That's a little better than expected. But the S&P down 1.125%, NASDAQ down 1.3%. That's not great.
No, RSI on that S&P 500 down at 31 level, so getting close to that 30
right
level.
As the end of the month hits, you're getting oversold in the S&P.
Yeah, and we saw bonds, were higher earlier, yields were lower. That was actually helping a little bit, but now we've seen bonds reverse. Relatively flat now, but that 10-year yield is sitting still around 4.54%. One of the big stories that came out overnight was ChatGPT and Microsoft investment in there. Let's bring in Caroline Wood, senior markets correspondent, here to help us break down this story. Caroline, I see the headlines on it, that new voice, new image. I mean, ChatGPT taking over here a little bit. Now, I always think of some really good, innovative parts of AI, but then I start, in the back of my mind, start thinking a little bit more dark, maybe, that some of these things maybe not things I want to use.
Well, and ChatGPT, or the OpenAI, the creator of ChatGPT, actually talked about how they're rolling out these technology changes slowly, gradually, to make it safer, so they can essentially kind of combat some of the risks and issues as they come. But I think the big headline here is that ChatGPT can now see, hear, and speak. In a blog post on OpenAI's website, it said ChatGPT now has new voice and image capabilities, so you can have a voice conversation or show ChatGPT what you're talking about, and it can respond. So they gave a few examples of how it can be used, and I took some notes here. You can snap a picture of a landmark and tell ChatGPT what's interesting about it. That kind of seemed sad to me, but I guess if you're lonely, you have someone to talk to. But here's where it gets more interesting, at least for me. You can take a picture of your fridge to figure out what's for dinner, and ChatGPT can tell you what you should make with what's in your fridge. You can troubleshoot why your grill won't start by taking a picture of the part on the grill that you're referring to, or maybe I could just learn how to turn on a grill via ChatGPT. You can snap a picture of your kid's math problem and ChatGPT can in turn share hints with both of you. I'm currently acting as ChatGPT. I'm not good at math, but my best friend sends me pictures of her 5th grade daughter's math problems and asks me if I can help figure it out. And it can also help settle a dinner time debate, which had me thinking. I'm curious if it's nonpartisan or where it actually sides. But over the next few weeks, you'll be able to actually choose the voice that you want to respond back to you.
Big pound sound, Rivian.
Have names like Ember, Cove, Sky, Juniper, and Breeze. I was going through the website and listening to each one. I mean, they're a little robotic, but they worked with voice actors to try to sound as human as possible. And the feature will be available to those who subscribe to ChatGPT and all of the enterprise customers as well. So it's like the $20 a month plan. This will be included. But I do think it's important that they did, as I said, make the case that they're going to be rolling out this technology very gradually to make it safe and beneficial, saying this strategy becomes even more important with advanced models involving voice and vision because it helps them refine risk mitigations over time while also preparing everyone for more powerful systems in the future. So the idea is to make ChatGPT more human and more immersive. So really to go head to head with Amazon's Alexa, Google's Assistant,
Okay, I flipped into calls.
And if you take a look at shares of
okay.
Amazon, Apple, Alphabet, and Microsoft, which of course made that big $10 billion
Midday chop
investment
got me.
in OpenAI, all lower today. Amazon's the biggest loser, off about 3%, but Google not far behind it. Alphabet is off about 2.7%. Apple off 2%. Microsoft off 2% today. So not giving a boost to Microsoft shares at all, but just going to show how this technology is evolving, and it's more of just becoming less of just let's type in something in ChatGPT and let's see if it creates a song for us, and maybe will be more beneficial and useful in everyday life. So we'll have to wait and see.
Caroline, I have 5 children and a dog. I don't really need any more people talking back to me, frankly. I would just like someone to do what I say and do it in an orderly and fashion. So, but I guess what I'm saying in essence is, as they roll out, this looks ripe for bad actors. And so the control and the safeguards on this have to be large day one, I would think, and only bigger as this continues to roll out. So how much of this investment do you think is in these safeguards that we're talking about?
You know, I don't have a number.
Yeah, the bottom of this
but we
cup's
know
pretty
the
overextended,
executives
but
of
yeah.
these companies themselves are calling for regulation because of the potential bad actors and for potential misuse.
Got RSI divergence on the 5 minutes too.
The regulatory landscape is going to be very key for this, but it seems like the technology is developing kind of without those guidelines, so it might be a bit of catch up, but I don't have an exact figure on that. But we have heard the executives of OpenAI and other companies, as well as Elon Musk, people like that, saying how important it is for regulation, just to kind of make sure that you know, those bad actors don't interfere too much. But I mean, we see it all the time, right? So it's not a huge surprise that this is just going to be something else that they can finagle with. But I do think that
There's a break of that
on
channel.
the blog post, that point of really rolling it all out gradually, slowly, really kind of drives home the fact that they're at least acknowledging that there is risk to this technology, and even, you know, pointing to more powerful technology in the future. I think just goes to show that this is really just early stages for this technology.
Yeah, it's going to be one of those flip the switch on and like, whoa, what's
Buy
it
coming
going to
up
do when I
now.
flip the switch on? Yeah.
Yeah, we'll continue to watch.
Do it for me. I don't need the answer. I'm like, can you come over and pack my apartment for me to help me move? Okay, done.
Yeah, exactly.
For $20 a month.
Yeah, and Google yesterday, or
AMC sold off some. It's only up
$1
0.36. Back to VWAP.
in a competitor in this space, so it's not going to be just ChatGPT moving forward. All right, thanks to Caroline Woods, senior markets correspondent. We got a breaking story here. FTC files antitrust suit against Amazon for marketplace monopoly. FTC in 17 states suing Amazon for maintaining monopoly power strategies. One of the comments was it's
First take profit. First profits at VWAP.
interlocking anti-competitive and unfair strategies to illegally maintain its monopoly.
We've got top of this channel,
quality for shoppers,
and then
overcharge
if
sellers,
we do a
stifle innovation,
full cup here,
and prevent
high of the day.
rivals from fairly competing against Amazon. So that's probably why
Only 12 though, so
Amazon
still have a lot of time to do a lot of stuff.
Probably based on the overall market.
Could hit the top of the channel and come all the way back down.
News of the FTC files. Kevin, real quick on this.
Yeah. Illegal exclusionary conduct that makes it impossible for competitors to gain a foothold. Ooh,
right.
That's illegal exclusionary conduct.
Lena Khan and the FTC need to win, don't they?
Well, let's put it this way. If they wouldn't make the Hall of Fame in a batting average if they don't have a lot of wins on the board, I would 100% agree with that.
Yep. Yeah, we'll continue to follow that story. Good stuff on the breaking news. Amazon getting hit here today, along with the overall market. But now let's bring in Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research. Randy, I wanted to kind of get your thought process here, because it seems like some of the four major indices starting to get towards oversold levels. It seems like nothing as far as data that's coming out, make commentary from the Fed, the longer for or higher for longer theme that's taken hold here in the marketplace. Is there any bright spots out there? Do you have anything for me, Randy?
I think the bright spot is that September ends at the end of this week, and that's it. As Kevin mentioned earlier, September has a very well-deserved reputation as being the worst month of the year. In fact, September has not only been down for the last 3 consecutive years, it's been down 6 out of the last 9. And then if you go back 50, 60, 70 years, it's down about 55% even over that period of time. So there's really almost no time frame you can find where September looks good. October is not a spectacular month, but it's definitely better than September. So the problem is, at the end of this week, we also might get a government shutdown, which historically has not been a big problem. If you go to the last like 8 or 10, I think it is, government shutdowns, the market has either been neutral or it's gone up. In fact, the last one, it went up quite a bit. But here's the catch. It generally goes down immediately when the government shuts down, but then after a few days it starts to recover, and then when they start talking about that they're going to come together and have a deal to solve the problem and reopen the government, then the market rallies sharply well before they actually reopen it. So that'll cause a wet blanket problem, I think, again at the beginning of next week. But once we get past that, even if we just get a continuing resolution to push it out into December, I think we're going to be okay. So I guess, again, I would say if there's a positive, it's the fact that all of these negatives are going to start winding down here over the next week or two, hopefully, because with bond rates where they're at right now, which I didn't expect them to get quite this high, with oil where it's at, and I don't think most of us expected that, and we're in between earnings season, there's just not a whole lot of things to be very positive about.
SPY almost a VWAP.
And kind of to expand on that, Randy, as far as headwinds for the overall market, you look at
a full cup on the day would be.
It's no surprise, right? Crude
Contract's
oil
gonna be
prices
crazy.
go back to
I don't know if we're gonna get it though.
barrel, rising interest rate environment, tightening, tightening credit across the board. Is that the next caveat or outlier out there that might signal that, hey, there's more weakness due? Because it seems like the market's taken hold of that the consumer is going to start cracking here at any point.
Well, I think the consumer is certainly slowing down already, and again, that's what the Fed's been trying to engineer. They want to engineer a soft landing. They don't want to throw the labor market into a mess. They don't want the economy to go off a cliff. They don't want major declines in GDP and all these other things. They just want things to cool off a bit. I think that's already happening, and in fact, it's happening at a relatively slow rate, which is exactly what we really want. And we want everything just to sort of slow down and settle down. And given where the VIX is at right now, I mean, not even anywhere close to 20, I think the market is taking all of this stuff in stride quite well, to be honest with you. We can't fret about high inflation and all these other issues and not expect that we're going to get a little bit of a pullback in the markets. I mean, valuations were getting a little bit out of control. The S&P 500 was up well over 19. Now it's back down into the low 18 range, which is very realistic. So we get lower valuations when prices come down, but ultimately we want those valuations to come down because the other part of the fraction, the earnings, are actually going up. We're still a few weeks away before we can actually get any info on that.
Yep, earnings season is going to be key, I think, moving forward here, Kev. But give me your take here on yields. 5.54% on the 10-year, Kev. That's constrictive, and it is restrictive. Higher for longer by the Fed equates to maybe some rough waters for equities at this point, or to Randy's point, hey, September's historically better. Start looking further out.
Yeah, it's interesting. There could be actually, this is the common sense trader in me thinking, there actually could be a nice setup here for the end of the month, right? End of September, and stocks oversold. If they get something, you get some announcement on the government shutdown. If you get a good core year-over-year PCE number on Friday,
yep.
A lot of things could be setting up where you might, I'm a trader. I'm really not a good stock picker, so I don't know where you would want to focus. But a lot of things are setting up here for, you're getting down to some pretty interesting levels here on the S&P. So I think things are going to get
coming down a little bit.
And I think it all makes Friday's PCE.
It's kind of the first little horizontal resistance there.
Yeah, we've seen this movie before,
yes,
Kevin.
Yes. They don't ring a bell on the bottoms.
They hit it in September, and then heading into the historically strong fourth quarter. But that consumer, I think, is going to be key. Randy, real quick here, when you look at maybe the yield market at this point, the dollar being firm at this point, is it going to take yields maybe to crack here for risk on trade to kind of reinvigorate itself?
Yeah, that plus all the seasonal factors that we've been talking about. I mean, you get these Q4 rallies often, and when you get a downturn going into it, as we're seeing right now, then that does set us up very nicely. I think the PCE on Friday, without a doubt, is going to show an uptick. We had 12 months of downticks in both the CPI and PPI, and then the last 2 months, both of them upticked. And then the PCE uptick last month is almost certainly going to show a small uptick. The question is it going to be slightly less than expected? Hopefully it will be. And then that will, again, keep the markets from getting even worse. But the more you get weakness going into Q4, the better you're set up for this nice year-end rally. And frankly, I do think there's a very good possibility that'll happen. If we can get past the government shutdown, if we can get crude oil prices to at least settle down, and if rates can just pull back a little bit, we could set ourselves up for a very nice rally. But I don't think it's there yet. I think we got to be patient for a couple of weeks more before we can see that.
Yeah, watch that year-over-year core PCE, Kevin, breaks 4%. on a year-over-year basis.
Yeah, the expectations are for it to go from 4.2 to 3.9.
Yep.
So that would be a nice win if that comes in as expected like that.
Definitely. All right, guys, let's take a quick break here. When we come back, we're going to talk Salesforce, the cloud-based CRM stock. It's pulled back about 7.5% so far this month, but still up over 50% on the year. We're talking that one when we come back.
We get a bounce on this shoulder over here. Probably get some more calls. I didn't sell any there yet, so.
Area where AI can have a big impact, and it won't be, again, just won't be for CRM, it'll be for a lot of other companies, but that's something they have to manage. This one has been, as you said, vastly outperformed the S&P 500 this year, up over 50% year to date, even though it's down about 9% this month. That's still way better than where the S&P 500 is, so it's done quite well. But it's suffering from this classic, what we're seeing with everyone is that the tide is falling and all the boats are coming down a little bit, and this one's just a part of that whole game.
Yeah, definitely. Now, going into, with the stock down over 8.5%, how do you want to look at this from an example trade perspective on here, Randy? Because if you look at it, implied volatility's jumped up a little bit on the slide that we've seen over the last couple of weeks, but it's not like outsized by any stretch of the imagination.
No, it's not. And the reason it's not is because the next earnings report's not until the end of November. So we're kind of in the middle of earnings season on this one. Again, this is just an example trade, not my personal opinion. A lot of ways you can look at this one, but let's look at some of the things we do know. As you mentioned earlier, it jumps up on earnings. That has been historically a pattern. It hasn't happened every time, but often it has. Another thing I noticed in looking at the stock chart on this one is that it not only jumps up on earnings, but it also runs up into earnings. So I guess maybe it's because the expectations
Jeez,
are high.
full house. Oh my
It
gosh.
starts to increase before the earnings reports come off in many cases, and then jumps even more after it happens. So let's take this into account in conjunction with all the topics we were talking about earlier. We got oil prices, we got the government shutdown, we got interest rates all weighing on the markets, pulling down the markets, the seasonal patterns of September pulling on the markets, this one coming down because the tide is pulling everything down. So my first thought on this as an example would be, okay, let's get out of this ugly seasonal issue and go out way past September so we don't have to deal with this. If you're expecting a recovery in Q4,
Well, I didn't make it to the bottom of this new bullish channel, but starting to bounce here.
Tech stocks and these
See
high beta
if it just
names,
chops
they
around.
will lead on the way down,
Way
but
up.
then they will also tend to lead on the way up. So let's say your thought is that previous run-ups into earnings might repeat themselves. The seasonal factors will start working more in favor of the markets here coming out going forward. So I thought, well, let's look at a strategy that is bullish, but not immediately bullish. A strategy that would take advantage of what we believe might be a run-up into the next earnings season. So I went out to the September expiration. And the normal monthlies expire on the 17th of September. That happens to be about a week and a half before the next earnings report on this one. So
real quick, Randy, this is November, right? Not September. November 17th.
I'm sorry, did I say September? I did. If I did, I'm mistaken. I meant November.
Yeah,
November 17th. That was my misspoke there. So if you get seasonal factors in your favor, if you get what has historically been this run up in,
I didn't get any more calls.
So one way of doing
like
that,
and
making it manageable, because you're going to be buying a lot of time here, is do what is often called a risk reversal put spread. So the way this works is we're going to buy the November 17th 185 put and sell the November 17th 195 put. Normally that's just a 10
close a call there though.
Spread, so it brings in money, and then you need the market to just stay flat or move higher. But we might get a pretty decent run if the market gets good and we head into the earnings report. So we're going to add to that the purchase of a November 17th 210 call. That gives us not just the credit from the credit put spread, but also the potential for unlimited upside in case we get a really nice Q4 rally, and this one becomes part of that. If you just bought the call outright, it would cost you about $6.50. This one was trading at about a 210 debit for all three legs. Now this stock has come down here as the market's weakened, so it's actually a little bit less than that right now. But looking at where it was at earlier at a 410 debit, that leaves you with a break even at about 214.10. So, and then you've got unlimited potential once you get above 210. Your max loss, if it goes all the way down below your lowest strike of 185, is about $1,400, $1,410 in this case. But you've only got about the debit risk, which is 410 between 195 and 210. So you'd have to have a pretty sharp sell-off to get down into that much larger loss zone. And again, this is going to take some time. So if you put it on, you'd have to be patient because we're going out here about a month and a half.
Yep, going out 52 days on this example trade, buying one of the November 17th 210 calls, selling one of the 195 put, and buying one of the 185 strike put. Kevin, helping to finance that long call by selling the put vertical, paying a 410 debit. As Randy mentioned, you've only got $410 in risk, down to 195, 1,410 below 185 on this one, but gives you upside exposure over the next month and a half.
55 deltas tells us this is a bullish play in Salesforce. What you've done is, what Randy's done here, he has used the short put vertical to basically cut the price of the long call in half, just about 60% of the price that you're paying. So once you establish yourself in a bullish posture, which is what this spread does, this is one way to finance the long call purchase with the short put. Now, the risk is what you paid for the call and the $10 on the put vertical. So there is risk all on the downside, and there's a little bit of risk if it stays right here. It's just the net debit paid. But what Randy said is true. You've got time, you've got an unlimited upside potential if it were to run. And if you look at the 3-year chart of Salesforce versus the 1-year chart, this stock's still $100 off its highs. It's had a great first half of the year, but still significantly off its high watermark. So yeah, this is an explosive.
Some of these flops, man.
Yep. Yeah, definitely have to take that into consideration. A bullish call purchase, help financed by a neutral to bullish put vertical on this one. All right, great look at that example trade that Randy brought us. And thanks to Randy for the Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, breaking down markets and CRM.
Oh,
Break, Kevin and I are going to be joined by
risky
Andy Swan from Likefolio for a discussion on Costco and the data on the stock moves. The retailers rallied about 22% so far this year, just below 52-week highs into earnings after the close.
They're just straight out there. Always gonna keep going. There's a flush out there also. Oh my gosh. Stupid. I'll call him. He had pocket threes. He didn't have the flush or the straight. Oh my gosh. He had an awful hand the whole time. Dish, just below $6. Look at that. You can catch a rally. Two pair? Oh my gosh. Jeez, overstock? Look at that. Below its support. Etsy also down 3 below support. Anybody has diamonds? Yeah, I'm selling one of my calls there. I guess 10%. Well, not quite. This is on my backup account. %10 on my backup account. Trading account, I'm going to hold those. King is the last thing I wanted in there. It is starting to kind of roll over at the top here, I've noticed. Not looking for downside yet, though. I don't trade with M patterns. I don't know how big M side downside you're talking about, or M side. See the bottom of this channel being tested. Just button up against this resistance for now. Oh my gosh, why'd I fold that? Psych you up. Mega dang, Umaga.
They're going to have to basically raise the price, maybe to get the stock to go higher. Although I don't know, they could blow the doors off earnings,
right?
And we just don't know.
They do have monthly metrics too,
which takes some of the volatility out of the earnings report. So what I did a complex trade. This is assuming a flat to bearish posture in Costco. So what I did, I took if you look on the chart, right around $570, it stalled a couple times up here. So I sold the 575.80 call vertical, right? In just this week, September 29th. And then I bought the 1 week, October 6th, September 29th, 540 put vertical, right in line with the expected move, Tom, on both sides.
540 put calendar.
540 put calendar. Sorry about that. Yes. And so this whole package is trading about a 30-cent credit, which means if nothing happens, you keep the credit. The call vertical would go to zero by Friday if the stock doesn't rally to 570, and the put vertical or the put calendar would, the short put would go to zero, and you'd be left with the 540 put for next week. But the total package, doing it for about a 30-cent credit, means if nothing happens, you don't lose money.
Yep, we've got 50-cent credit up here on our risk profile because that's where it was trading earlier. But let's walk through this. Buying a 1 week wide put calendar on the 540 strike.
You're testing close to the top of the channel. We also have VWAP up there.
Put, selling the near term September 29th 540 put. There's your 1 week wide put calendar to the downside. And then to help finance that, you're selling the 570 strike call in the September 29th cycle, buying the 580, so selling a short $10 wide call vertical. Collecting that credit takes your break even to about 571.50 over the next 10 days on this trade, with only the put calendar portion of it. Now, risk on the upside, that's going to be about $950. With collecting a 50-cent credit, a little bit more if you only collect about 30-cent credit. But as Kevin mentioned, even below 520, you're going to profitable on this.
You got it. Good morning. Tag along.
Around that 540 strike, but as we mentioned, that break even just under 572. even if the stock doesn't move
Like
that
that.
much, maybe grinds down a little bit, you can remain profitable on this. The key, I think, here, Kevin, is you want to stay below that 570 strike into expiration over the next 3 days, right?
Yeah, neutral to bearish is what this posture of this complex trade is. It's, you know, it's not an opinion. All it is this is a strategy. The learning part is a strategy. This is neutral to bearish strategy, and it's using, much like Andy did, or Randy did, it's using one spread to finance another.
Yep, option market's pricing in about a plus or minus $15 move in the shares post earnings, so that's that one standard deviation move. The options are pricing on this. You do have some assignment risk on that short 540 put that expires in 3 days, and then also on the short 570 call that expires in 3 days. So keep that in mind. But a good look at a complex strategy going into earnings, taking advantage of maybe some neutrality, maybe a grind lower down towards that 540 strike. All right, let's take a quick break. When we come back, we're going to take a look at Broadcom. The chipmaker cybersecurity segment is partnering with Google's cloud as it expands further into AI. Fast Market's coming right back.
Let's get nuts! market bull, Jenny, you gotta welcome some selling. It gives you opportunities to get into different positions, things that maybe you missed along the way. Look, the market made a rally to start this summer that maybe it hadn't earned yet. Let's just put it that way. Earnings have declined for 3 consecutive quarters, yet we saw valuations swelling.
All right, SPY rejected you up there.
Looking, but the past hasn't been so good.
Did close most of my calls.
It's been very, very impressive this year. Some natural pullback here.
Actually, before that VWAP rejection.
Yeah, and I think that's exactly why we're seeing so many.
I think we still could make it
analysts
happen, but we'll just see what happens on this channel.
The risk and reward is skewing more favorably. So actually, a lot of analysts still feeling pretty upbeat about several names we'll be discussing on the show. We'll kick things off here with our upvote and downvote segment. Following that, we will chart and trade those upvotes. And our FOMO discussion is one of those names that's actually bucking the overall trend. That's DraftKings making a nice, almost 3% move higher on the session, with analysts saying that they actually see this as a good entry point into shares. Then we will look at the team trimming a lot of their price targets on several of these airlines that have also seen a pretty major pullback month to date. Last but not least, we will look at Redfin, as another analyst at Gordon Haskett does see now, again, more balanced risk and reward in this name.
Time to play cards.
A lot of upside actually from the analyst community today, despite
GME at 16, yeah, maybe.
Pretty much across the
probably.
board.
Excited for the draft.
16, 18, and then maybe the 15s level.
The games, the last couple primetime slots.
AMC's down 2.5 now.
Great. They've been a little bit of more of a stinky
Still
games,
in this cheese wedge.
Big weekend for Vegas. A lot of underdogs winning. And Coach Prime in Colorado just getting thumped by Oregon brings a warmth to my heart as a Nebraska fan to see Colorado lose. But all jokes aside, anytime the public loses, you know it's a win for the books.
And you know, it was a big L for me as my first fantasy loss of the season. So I am bitter on all things fantasy football right now.
I'm 0-3, so I'll trade you.
It's been a rough season. A lot of injuries this year. So DraftKings, we obviously have a lot to talk about, but as always, upvotes, downvotes, not recommendations. Just some of the biggest moves we're seeing in the market that garnered our attention. We'll start things off here with Microsoft, as Microsoft is one of these names.
It's only 1 o'clock, I guess.
Saying,
Still kind of in a chop.
Your position here at pacing for its longest losing streak in over a year. Another
They've
move
spot
to the
test this
downside
right
today,
shoulder even.
and we are seeing some developments regarding their OpenAI investment, specifically with ChatGPT, that it can now see, hear, and speak. And the company did post updates to ChatGPT on a blog that do include some various voice and image capabilities. Now you can snap a picture of a landmark while traveling and have a conversation about what's interesting about it. That was part of the blog post.
That was
this
crazy.
is to me more exciting though. You can snap a picture of your fridge or pantry, and it can tell you what you can make for dinner, and it can ask follow-up questions for step-by-step recipes just using your voice. These voice and image features in ChatGPT will be rolling out over the next 2 weeks. Voice is coming to iOS and Android, and images will be available on all platforms. So this is huge. I always think some of these capabilities are so cool, especially the fridge one is like, I have to try it out myself, because I've tried
support on the
image
channel.
Recognition one. You can take a picture of any image you see, and it can tell you, say it was like a famous portrait, it can tell you the artist that made that, which is so cool.
All their positions though.
Microsoft shares though don't care today.
Wasn't as nice of a setup as this break.
Fueling the fact that shares are down about 15% here off their 52-week highs.
What's different about this than asking Alexa, things or, things of that nature? Sorry for anybody who has one of those at home who has speakers and I just activated it. But, I get ChatGPT is doing some cool things, but to me, this is a lot of repackaged technology in some ways that we've already seen. How often am I going to be taking pictures of things and looking it up? And to me, it's one of those things, you try it once, you prove it works, and then you forget you can do it. Maybe I'm just in the minority and I'm not fully bought in yet.
See, and I need this technology to be integrated into a refrigerator, because that would be cool then, like a smart fridge that could tell you exactly what you have in stock and then what you could make for dinner. That would be something
I just need my fridge to keep the food from going bad.
Yeah, okay, that too, like expiration, if it could tell you if you have something that's expiring, you need to eat it. That would be, we should pioneer. That's a very good idea. So our next name today though is one I think that we could tie to a lot of the overall market selling. That's Apple, now down about 8% for the month. So Apple has been somewhat of a, significant underperformer, but just making some modest moves lower. Hasn't necessarily felt like a bloodbath. When you look at the last month,
Shares have pulled back about 13% from their highs here. But analysts, again, see this as an opportunity. JP Morgan reiterating Apple as overweight, saying that in week 2 of their Apple product availability tracker, lead times are predictably peaking, similar to prior launch cycles. However, lead times are expanding rapidly relative to these prior cycles. So they actually see this as a good thing in terms of iPhone 15 demand. UBS also highlighted some key takeaways following that iPhone 15 launch last Friday, saying consumers are spending on experiences, which might seem counterintuitive from one of the biggest consumer good launches of the year. But changes made to the phone by Apple are in line with the trend that consumers are spending more on experiences. Apple's really hoping to capitalize on its experiences with its VR headset. Of course, the Vision Pro, which is around $3,500. It's not cheap. Apple executives did also pitch the iPhone 15 Pro as the best video game console in an interview recently. So they do see that A17 Pro chip being one to serve the video game market quite well. Actually, on the iPhone 15 Pro Max, you can have up to 1 terabyte of storage, which is then great for those gamers. I was looking at that model though, Alex, and again, it is not cheap. Plus, they did say that Apple made the sustainability movement with the iPhone 15, given the fact that not only are they coinciding with a lot of the EU's wishes to have that USB-C port to then cut down on all of the chargers and garbage that we go through every time there's a new iPhone cycle, but also the fact this is made with titanium and made in a more green capacity. And so that, I think, is seen as a way that we could see a lot of other companies follow suit. Their carbon emission push here is being read as positive, although I did tweet about it and everyone tweeted back to me that they don't think that actually matters at all. So that was an interesting perspective nonetheless. But Apple does still skew more optimistically. 41 analysts, there are 30 buys. There are 10 holds and 1 underperform, but Street, all in all, does still like Apple, even with this recent pullback.
Nothing I'm about to say is not something you haven't heard me say before. I don't need to do this crazy amount of homework and research these analysts do into the channel checks, and oh, it's more experiences and more goods. Look, the iPhones just aren't improving that much. They haven't improved that much for 5 or 6 models. That's why the lines at the stores aren't that long anymore. And you can make the excuse that, oh, the lines aren't that long, people buy them online. They're just not selling as many iPhones for upgrades because you don't need to upgrade your phone anymore to get a better experience. The phones work. I got the iPhone 11. Works fine. I don't need the iPhone 15. Maybe one day I'll get the iPhone 15, 16, 17, but it's going to be when the iPhone 11 no longer works or there's a noticeable difference. There hasn't been a noticeable difference. The cameras get a little bit better. I can't tell the difference. I got to get my magnifying glass out. Now, if you look at something from 2005, the picture looks a lot better. Technology is improving, but it got so good that our eyes just can't keep up with how good these pictures are getting.
Yeah, that's a really good point too. And I'm curious, did you upgrade yet to the iOS 17? Because what I notice is as the software gets smarter, my older iPhone works a lot less well.
Well, and that's been a consistent point, is it drives more usage of memory and things like that, and the older phone has older technology, older chips. It's not going to work as well. I'm not sure, to be honest. If it auto-updated, it auto-updated. I don't have any numbers on my screen, so I think I've probably updated.
If it works, I'm only upgrading because my iPhone is not working anymore. So I've ran it into the ground.
Goodness, look at that candle.
It could be the same model for all I care.
Crazy bounce on that shoulder.
You're first in line for the Vision Pro, though, right?
I'm first in line for the Vision Pro. No way. $3,500. I could spend that money a lot more usefully. But our next name today now is Rivian. And Rivian shares have also pulled back about 40% from their high, but actually shocking me to see that only down about 1% this month. Bayer did name this company as a top pick or top idea or fresh pick. Both uses were used here, saying investors should buy into some of this weakness. They now see third quarter deliveries as a near-term catalyst and expect sentiment to improve as Rivian continues to realize cost benefits from an improving supply chain and use of in-house components. They did say they do still believe, though, that Tesla is best positioned among its peers and recommends this name also as a top pick for the second half of this year. So they've named both Tesla as well as Rivian top ideas, although Tesla's the top pick, which maybe gives it a slight leg up. Difficult to compare these names as far as valuation goes, but Rivian up 22% this year. I mean, not comparable at all to Tesla's performance or its scale, really, but they do like both of these names now into the second half of this year.
Key differences, though, I guess, we're talking Tesla, a little bit more of an expensive price tag at upwards of $250 a share. Rivian at $22 a share, about a tenth the price for a smaller account. It's not the same thing. They're very different companies. They're different stages, but maybe a proxy for the space. And Baird at least saying bullish fresh pick, or the verbiage they use, a little bit more excited about. Something to think about. Higher beta exposure potentially too as an earlier stage company, but I do see more and more of them on the street. Granted, Chicago, only a stone's throw away from Normal, Illinois, where these things are getting churned out.
Right, you'd hope we see more of them on the street, considering we're the most major city close to Normal, Illinois. But our next name today is Fisker. Fisker looks completely different than any other EV on a chart, given that it's down 14% this year, although B of A saying that they might be able to grow out of their ugly duckling phase in the EV market, which were their words, not my own. But the B of A analyst did initiate coverage on the stock at a buy rating and an $8 price target, which implies shares could rally around 50% from where we closed Monday, obviously seeing some significant upside in shares today. But this analyst said Fisker does offer pure play exposure to the rapidly growing EV market. It has key milestones now coming in 2024 and a lower risk business model versus its peers, also describing the stock as a pure play EV force. And he did highlight their first product, which is a car called the Ocean that launched earlier this year, as both attractive and compelling, saying there should be a meaningfully inflection point in volumes next year, which can push up and help them break even on their EBITDA, which he noted would be a major moment for the stock. So it's been quite some time since we've discussed Fisker, because again, they really only have that one product that was launched earlier this year. I do know there's more coming in the pipeline, but it's been a while since not only we discussed this name, but we discussed it on a day when analysts had so many good things to say regarding a company that is somewhat lagging the growth of the rest of the sector.
When a stock starts getting down to these single-digit price tags, it really kind of narrows the focus, takes a lot of strategy off the table. You can see the ground, I guess is what I can say. It can only go to zero, so keep that in mind. But clear struggles, having a nice day today. One to watch. Some of these names aren't going to make it, not to suggest Fisker is that one or one of them, but this space has become increasingly crowded, and some of the old school legacy players are trying their hardest to break into that too. I'm excited for the years to come. We'll see which ones emerge victorious.
And facing increased regulatory scrutiny, which we'll discuss more later on this show, but we'll step away from the EV conversation. We will look at those tech behemoths being Microsoft as well as Apple. We'll be diving into some technicals in both of those names, as well as example trades. Stick around. Next Gen Investing. We'll be right back.
The shorter ones, the short and medium term ones, trending downward. The faster one is crossing below the slower one, a sign of the trend continuing to deteriorate here and accelerate to the downside. Our long-term one, still trending upward very modestly here, but looking a little bit more sideways at this point here. So we're seeing a stock that is trending downward and breaking below support, with our moving averages and our other trend indicators also pointing toward the downside for right now, Jenny.
So some near-term pain, overall still strength in Microsoft. I mean, it's still up on the year, but as far as momentum of this trend goes, what are you watching as far as RSI?
Well, another potentially concerning situation here, because you can see now we're breaking below our support level. At the same time, RSI is making lower lows with price here. So more following the price action, confirming what we're seeing. A break below support is never what you want to see, really, if you're bullish. And this is kind of just lending additional credence to this move here. We're still out of the oversold area. We're still not, experiencing a severe move below the support. In fact, we're pulling back a little bit from the lows there. It remains to be seen whether or not this will be a significant break at this point, but it's still worth paying attention to because the momentum is on the side of the bears right now.
Okay, so as far as support and resistance goes, we do have about a month till earnings, which is coming up, I'd say, rather quickly. Thank goodness, to finally, spike up this news cycle. But what are you watching here over the course of the next month or so ahead of earnings?
Well, a couple things here. And I like to include volume profile, this blue bar graph on the right side of the screen. This shows the areas of heavy trading, and this can be support and resistance levels to keep an eye on here. First, our green dashed line, if we do break through that, look at volume profile. We can see that there's heavy trading in a relatively small time limit area. So right around centered maybe 307 or so, that could be an area to watch for potential support. If we continue to break to the downside, first we've got our 252-day EMA coming in right on the money, almost at 300, and then we've got a further volume node right here between about 285 and 290. So there's some areas to watch to the downside, and this doesn't necessarily mean you're bearish. If you're looking toward the downside, you could be looking for strikes to sell a put at or something like that. So these are just kind of key levels to watch. To the upside, this one sticks out to me right here. We've got our two moving averages, 21-day and 63-day, basically on top of each other, near about 325, then another volume node near 335.
Right, and of course, I think right now the attention that's being drawn to so many investors, it's a way to sort of then capitalize on some of the recent downside like you laid out. So with that in mind here, for an example trade today, Alex, walk us through what you're thinking, leaning into some of the pessimism while also leaning into some of the overall optimism, a more neutral example trade.
Yeah, letting that game of tug of war play out, looking at that trend trending lower and shaping a neutral trade around it. Volatility levels have perked up across the board with this recent sell-off, and premium sellers look to that as a possible opportunity. We're looking at selling an iron condor surrounding the current share price, but also giving this a little bit of attitude to kind of lead that trend to continue lower. This is a slightly bearish iron condor because we're slightly closer on the call side than we are on the put side. So what we're looking at in particular is selling the 332.5, 337.5 call vertical. That is to the upside and also corresponds nicely with some of those resistance points that Rick had highlighted. You want your strikes to be outside of those resistance points so that if they do run into them and test them and potentially hold those levels, we're still out of the money. That's the best case scenario for that call vertical. On the other side, we're selling a put vertical down below the moving average that Rick highlighted into that volume node in that 285, 290 zone, where we're selling the 290, 285 put vertical alongside this, creating an entire package for $1.25. That means we can make 125 bit stays between our short strikes and our break evens. You simply add and subtract $1.25. You can see that on the screen, 288.75 and 333.75. So a nice $55 window in a 300 and some change dollar stock is a massive net cast over the current share price. Total risk, take that $1.25 away from 500 and you get 375. So 375 in risk, 125 bucks in max profit. Neutral strategy, but shifted slightly downwards. Give it a little bit of short delta here, Jenny, to kind of guide this stock lower along its current trend.
Giving it a little bit of attitude. I like this phrase that we're sort of stealing from Kevin Hinks here. Now to shift gears here, though, and look at our next name, which is Apple. Apple's down another 0.5% today, adding to the fact that we've seen shares tumble almost 8% month to date. And Rick, I will say, it feels a little bit unusual to see some continued weakness in selling in a name as resilient as Apple.
Yeah, and what struck me about this chart is how similar it was to our previous chart. Both tech giants, but different companies, but so many similar characteristics. A long uptrend that has been broken. A downtrend starting with our yearly highs. Trending downward, a failed attempt at the highs that fell far short. Our moving averages diverging apart from each other, the faster crossing below the slower, but still above our purple 252 day, so kind of in between the moving averages here. The key difference in this chart, though, we are not breaking through the support. We're actually holding a little bit above our previous lows here near 172. That would be the point to really start to take notice. If we cross below that level here, that's our recent lows. We can also see that since we had this gap down and this kind of severe plunge here a few weeks ago, we can see that we kind of formed a ceiling near the 180 level. So a little bit more range bound in the short term, really. So kind of a mixed picture, though. Like I said, long-term moving average trending up, short and medium term trending downward, but not breaking through support. So bearish leaning, but not really making that key crossover yet.
So oddly similar to what we looked at a lot with Microsoft, although perhaps not seeing the same degree of weakness over the last several weeks. But now we're looking at momentum. Walk us through what you're seeing here.
Well, a little bit of a situation that they refer to as bullish divergence here. Take a look at the previous lows that we established right there. We're making a lower low today. We're trending downward here. RSI is actually improving a little bit, though. So that suggests the momentum is getting less bad, I guess you could say, like improving a little bit. It's still bearish, but it's not as bearish, and it's a mismatch between price here. If the trend were accelerating, you would expect the RSI to be trending lower along with price. This could be a sign that we're perhaps building up a little steam in this name, gearing up for a little bit of a bounce here. And I think it's also worth noting that we didn't take out these 172 lows once again here. We would really be curious to see if price broke below that 172 mark and kind of broke below this, maybe you could call it a bit of a trend line here, but broke below and broke into the oversold area. That's what would really make me take alarm if I were a bull.
And we're dangerously close, right around $173. We're nearing 171, 172, but not there yet. So that does provide us some optimism. So what are you watching in terms of support and resistance?
Once again, taking a look at volume profile can help identify some support and resistance areas. You can see right around here, centered around like 173 or so. That's where we're working our way through to the downside. That's a little bit concerning here, but once again, 172 is the place to beat. Purple 252-day EMA near 168 as well for potential support there. And then another volume node around 166 to the downside. To the upside, 180 would really be a spot to watch here, especially because that's roughly in confluence with our orange 63-day EMA. So the old highs and the moving average, that would be a mark to watch to the upside.
All right, 180, and that still actually puts us well below the average analyst price target, which is still just right below $200. 180 in the near term will keep on our radar to the upside. Appreciate the technical breakdown, as always, Rick Ducat, our chart master. So now in trading this name, Alex, although we don't have earnings as near term as Microsoft, seems like every day there's a catalyst with Apple, given the fact they just released that iPhone 15, which we discussed. But walk us through what you're thinking, then leading into perhaps some more optimism versus its biggest tech peer being Microsoft.
Yeah, looking at something in the neutral to bullish camp. And again, we're thinking premium selling with this recent uptick in implied volatility. Options are getting more expensive relative to themselves as that implied volatility increases. We're basically centering this around what Rick highlighted, which is that this stock has found support around this 172 or so level. We're going one strike away from that. We're selling the 170 put. To define the risk, we bought the 167.5 strike put as well. It's a $2.50 wide spread, collecting 75 cents. So about, let's call it just over or right around, 60 cents on the dollar of risk, but a little bit under 1/3 the width of the strike. So it creates a just over 2-to-1 risk reward ratio in our sort of loose guideline zone. 169.25 is the break even. Anything above 170, this thing expires worthless. That's max profit 75. and then the max loss at 175 is all below our long strike at 167.5. So Rick had talked about he'd be worried if it broke through that support. Well, that's where the risk would take place, but it's defined to 175. So looking for that support to hold in that event, $75 and max profit is the potential.
And looking for things perhaps not significantly worsen from here, but we could ship a little bit more to the downside just given some of the overall price activity we've seen in Apple as of late. But we will leave it there. Really great breakdown on both of these charts in Apple and Microsoft. But now coming up next, we will shift gears, look at a stock that's making a nice move to the upside. That is DraftKings, with shares up almost 3% on the session. As we enter week 4 of the NFL season, we'll discuss that name more coming up next.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Also, some of the international companies that we talk about as well, GM could be also part of this. So really they're looking at the subsidies that are going to some of these companies here, and really it does appear that for me it feels like they're trying to really assess to see if the subsidies in themselves are really eating into the potential growth that they could have within the EU, specifically in Germany, which has fallen behind a little bit when it comes to China. Now it is expected that China could actually boost exports so much this year that they could be the leading exporter when it comes to EV cars around the world by the end of this year. So I think right now they want to just be able to look at the marketplace in itself to see if there's any type of wrongdoing that's happening, and as well as trying to mitigate any further risk when it comes to growth in the EU. Now, the executive vice president here actually also just noted that this will be fair. The executive vice president and trade commissioner of the European Commission said that this would be a facts-based investigation and would adhere to EU and World Trade Organization guidelines and not to really prejudge the results of the investigation before all the facts are laid out here. So let's see how this is going to impact the EV market as a whole. Right now, I don't believe that that Tesla stock has really been impacted by this news. I think the broader market sell-off has definitely put some pressure on the shares as it's starting to trade closer to support area at around $230, $240. So I think that has a little bit more of an impact in this news story right now.
Yeah, Kevin, that was going to be my exact question, because I do know that Shanghai is their largest plant, but then doesn't that Shanghai story matter more to the cars and the customers they're serving in China versus the EU? Because when you look at the EU's penetration into some of this electric and EV space, it's still relatively small. Not saying this couldn't dampen the growth, but Shanghai, to me, I think more of than China numbers.
Well, no, it's growing to be a little bit more of an exporter. So we have to also just kind of keep in mind, so Tesla does have a gigafactory in Germany as well that they're trying to ramp up. But what we are actually seeing, what they're trying to address here when it comes to the European Commission, is that a lot of manufacturers are really ramping up their China production and then exporting those vehicles over to, let's say, the EU or even the United States in some cases. And so some of the incentives that those EV companies are receiving from, let's say, the EU are utilized within China, and then they're basically exporting them back over to the EU. It's not really fostering growth for manufacturing within, let's say, Germany. So I think that's actually the problem. Now, when you're looking at Shanghai, yes, it's to also boost the production and boost sales within China. But I think there's a bigger logistical strategy here, and you're looking at a country that has the workers, the labor force that's ready to be able to participate in this marketplace, as well as the technology and a friendly government when it comes to EV manufacturing in itself, battery production, things of that nature. So I think it's just a strategic move by Tesla and some of the other major players. And I think the EU is really trying to assess if these subsidies are being utilized in the best way to be able to foster growth within their own respective countries.
Okay, and that's a really good point, because it's just going to be more of the import-export story with some of this EU probe. Obviously, still fairly preliminary here, but
I got some more calls there.
Here when you're a growth engine, the way
I don't see an M pattern. I see inverse head and shoulders.
Great breakdown, as always. Kevin Green, senior markets correspondent for the network. And I'd
This
like
is
to bring
lower.
back in Alex, and it's time for FOMO. So we are talking
Being ahead,
DraftKings.
but we'll see if this shoulder breaks through. Then yeah.
This market we can discuss, with shares up over 2.5%, almost 3% on the session here. Despite my own personal feelings about my NFL fantasy football lineup, which absolutely completely betrayed
a lot of
me
different
this week,
channels today.
I can get excited about DraftKings being higher on a day when the rest
Definitely
of
a
the market
mess.
has been lower.
Yeah, this is the stock that's made a pretty nice comeback. You look back to sort of the summertime of last year, kind of the doldrums of the summer
not as nice for trading days
season,
yesterday.
and kind of all the stuff that was going on in equity markets. This stock got down to sub $10. So to be back near 30 and kind of hung out here for the better part of the last quarter, I think is impressive. But we also forget that at one point this stock was almost $75 as it was kind of caught up in that SPAC boom, the online gaming, sports betting boom during the pandemic, where, once sports started to come back, that was like the premier way to kind of spend some money when you couldn't spend it elsewhere.
And poor DraftKings, their SPAC was at such an ill-timed part of the sports world, because it was sort of right before we saw a lot of sports shut down. But they've been able to weather that storm, I mean, as you can see from the 3-year weekly chart, quite well here. JP Morgan today upgrading shares to overweight from neutral with a raised price target to $37, up from 26, saying that they recommend taking advantage of the 13% pullback we've seen in shares since July. The firm does continue to think gambling is an appealing sector with attractive same-store and new market growth prospects against the backdrop
The shoulder
of
might be breaking. We'll see.
improving operating expense control environment for a name like DraftKings. Additionally, this analyst did say he anticipates that DraftKings is seeing improved loyalty, which could help the company reduce
So choppy
what it
today.
has
It's
to spend
freaking
bringing
ugly.
in business. Marketing expenses has been a concern, a pain point for a lot of investors, as DraftKings was shelling out cash
And then, yeah,
to
those
really get
huge
its
candles earlier.
brand recognized. And I think they've done a pretty good job of that. I get these commercials
There's the
now
flush. Yeah, I'm out.
constantly. They're
Dang.
like my top commercial.
Crappy time to exit, but
$500 or $5 to get $200 commercial at this point. But this analyst did say that while looking at the market for online sports betting, while they do see it's as competitive, they do see it's
yeah, I'll see what happens at
positioning
low of the day
now strong,
again.
given its strong moat and the fact that it should be able to compete with a lot of new entrants, being Penn's ESPN Bet and Fanatics. So they do see this trading at around 2 times their 2026 estimates, and right now see strong enterprise value in terms of their forward-looking EBITDA.
It's freaking choppy,
All
though.
positive remarks from this analyst today. DraftKings does have
You're right, CJ. It's a choppy day. I thought it was going to be more of a continuation of the upside.
Average price is around $36, which puts it pretty much right in line with this $36 price target that JP Morgan outlined.
What happened the last 10 minutes again, like
Shares
yesterday?
are still up, though, 146% this year, even with this 5.5% pullback this month.
When it comes to the online sports betting world, this is a 2-horse race at the moment. There's other horses in the race. They're just nowhere near the front. And it's FanDuel and it's DraftKings. They've dominated this space, getting out in front of it, getting all the signups for daily fantasy sports, parlaying that into online sports betting as those regulations came down, 5 years ago or whenever that was. It's been huge, but this is still very market specific. This is still a story that relies on regulation and legalization as much as it relies on interest into this space. I'm not sold on Fanatics. I'm not sold on ESPN Bet being real threats yet, but that can change at any moment. So we'll see if those names can gain more market share.
I mean, depends on how you like to trade it, Mr. Invest. You like to try and time the bottom perfectly, or you like to wait for the momentum?
We've seen greater revenue share for a company like DraftKings. But we need to see this continue because it's showing signs of maturation. The player growth is falling off.
If you're only going to get one, then I would wait for momentum. If you're going to get more than one, you could scale in.
Absorbing a greater portion of that.
You get some now.
And that's, I think,
there's new low on the day.
The idea, especially considering the fact that
see if we hit the buy on this channel.
Stickiness when you sign up for, say, a FanDuel, a DraftKings, and you have an account with them.
I don't like any of the setups today.
Account, so I continue to use them. Why would I go to yet another app when I already trust and know a lot of these apps? That's just my mindset right now. I have money in my FanDuel account.
This is the important thing, because if you're just the everyday doing this for entertainment, I'm maybe going to the game, I want to put 5, 20, whatever the number would be on the team that I'm going there to see, you're not going to be shopping. You're going to go to whichever one you probably signed up for that you have the money in or is easy for you to get the money into. Where if you're doing this, a little bit more professionally or as a bigger chunk, let's say, of finances, you might be shopping around looking for where you can get the best odds, looking for the different numbers, and so much of the volume comes from that particular bettor as well. So the more professional bettor, they're going to have accounts everywhere, but what DraftKings and FanDuel have really focused on is getting the everyday person and sort of the amateur bettor on there, trying to get a lot of those small bets, oftentimes maybe less informed bets, as opposed to the big money professional bettor.
Yeah, I'm like the money losing bet because I have no idea what I'm doing. But I will say that, a customer like myself isn't moving the needle. More and more, I'd say customers that have never bet before is something that DraftKings has done well, sort of harnessing those in and then making them loyal to their platform. So in that way, they've done a great job marketing. So the expense has paid off. But when trading this name here today, Alex, it is making a nice move to the upside. It's bucking the overall market trend quite substantially. And with this analyst in mind, $36 price target does imply, 37, implies some upside from here. So walk us through what you're thinking when trading this name.
Yeah, I looked at buying a call zebra. This is essentially a stock replacement strategy using options. There's key distinctions. You don't actually own shares. There's an expiration date. You don't get dividends if they were a dividend-paying stock. Options don't get
I haven't talked about Barbecue much. Yeah, it's in a downtrend. Definitely, of course. Could very well bounce on the OTC level. 4 cents, 48.
It does seek on the upside at least to mimic 100 shares of stock.
It could break through that though and go to the sub pennies. Also,
buying 2 of the 75 delta calls, which is at the time that I was looking at this corresponding with the 26.
Are you looking to buy more, trying to get a better price, or
selling one at the money or just out of the money? 28.5 call, and so seeking to sort of sell that 50 delta call alongside buying 2 75 delta calls. So math-wise, that goes down to 100 deltas, which we know delta, sort of that stock equivalency in terms of theoretical performance, gets you down near 100. So 100 deltas long on this. But more importantly, the actual acronym for ZEBRA stands for Zero Extrinsic Back Ratio Spread. The idea is to try to get this break even as close to the current share price as possible, so you don't have that downside element of, you buy the call, but you have a break even that's quite a bit higher than the current share price because of how option premium works. And so this, how it's constructed, seeks to reduce that theta decay against you as much as possible. And you can see that break even there. Simply take half the debit spent, add that to the long strike. So at 440, which is what we used for this, that brings you to a 28.20 break even, which is pretty close to the current share price. Your risk is to be the debit spent, that's 440. So there is one key distinction here. If you were to buy 100 shares of this stock at 28.20, you'd have a full 28.20 at risk, of course. It would cost that much to do it. But if this stock went down
start getting back into calls on this level here.
$26, you'd be out
channel.
220. That's just, 100 shares down to $2.20 per share. In this particular case, you have twice as much risk down to 26, but then the
I
risk
didn't play puts
stops.
more today.
So your full risk is taking place at that strike.
There was a couple times I had puts today, but
26. So 440 in risk, twice as much risk to 26, and then no risk beyond that. Also a little bit of sort of a capital efficiency component to this too, Jenny. As I just said, you were buying 100 shares of stock at that price, $28.20, $28.20 were this $440. So a lot more capital efficient, but there's always trade-offs, and we kind of went through those there. No upside profit definition though. Unlimited upside.
Too many twos right in that equation. 28.20, say that like 10 times fast. But we will leave it there for FOMO. Now coming up next, we will look at a space that is getting rocked today and rocked this month. That is the airlines, with losses on the session led by Southwest. But broader note on a lot of these major players from Nita Young. We'll have more on that story for us coming up next.
GNS down 8.3. Guess that was a good stop out. Yeah, I would wait to average down on barbecue. I mean, it hasn't shown any sign of it even slowing down. You know? So you have to break the upside of that channel. But what can you buy it on?
they're going to be a material hit to third quarter margins. That's what these companies are saying, and it's also prompted a pullback in the price of these shares. And investors, they're concerned about this, obviously, as you can see in the pullback in shares.
So what are some other headwinds that have weighed on these various airlines? Because the story with Southwest has been ongoing. I mean, their story has been start to finish since December, since those Christmas delays.
Yeah.
They cannot catch a break. But then when looking at the rest of these airlines, I mean,
I'm
United
starting to
was
scale
on a
into calls
tear
here.
earlier this summer, and now it's only up around 13% this year. So what are some other headwinds that are weighing on the overall airline space?
So we do have, of course, the higher input costs for fuel, but they have higher input costs for labor as well. Some of them renegotiated agreements this year, and now they have to pay up. There's another one, the capacity growing may be an issue, and then demand may potentially plateau as people no longer book the treat yourself fares.
One thing that sticks out to me, though, is while they did blanketly kind of bring down price targets, maybe they're seeing a little bit of opportunity, though. Still outperforms on 3 of the 4, market perform on one of them. But to me, it was the kind of the implicit admission.
Give me down
from
3.23.
like American Airlines that slashed its earnings and kind of citing
testing that level.
They're essentially saying we can't pass this on to the consumer. So this is where I think it becomes very interesting from a macro standpoint, Renita, where oil going up isn't necessarily inflationary for you or me outside of what we pay maybe for our cars at the pump, but we're not necessarily paying it at the for the airline tickets. The airlines are trying to eat this cost right now.
Grabbing
to
more
me,
calls.
That's the big story here that's being untold.
On here.
You know what, you're so right, and I'm glad you mentioned that, because Bernstein said the bigger network carriers, which all of these 4 are considered network carriers, they're actually in a better position to be able to absorb that because they have international flights. So spot on. We're not exactly paying the costs are not exactly being passed on to consumers because they're in a better position to be able to absorb them. Now, if they get too high, it may be another question about that.
Also, though, I would say, though, they would pass them on if they could. They're worried that demand's not there to afford higher prices. So to me, that's always the takeaway.
And that's a really good point, because weren't we already paying pretty much inflated costs? I mean, airline fares right now are not cheap, and to my understanding, they have not come down at least significantly anytime soon, but we're finally off that summer peak, so things normalizing. It seems like the analyst community is then adjusting, because it's not always going to be summer. Not everyone's going to be going to Europe every weekend like it felt like during the summer.
Totally not. And plus, I feel like personally, the points systems, the points are accumulating a little bit less aggressively as they were once. So it costs
What about Charles Schwab?
Rack up points as well, which
is that TD Ameritrade?
One last thing.
That's Schwab now, right?
I don't want to, hurt any.
I haven't even tried on there.
Prices are probably never coming back. Inflation doesn't.
What did I get into here?
Unless we get deflation, that's a whole other story.
Yeah.
That's another problem. We just got to hope they
Just
stop
you and me?
going up. That's what we got to hope for.
And I understand. I mean, I flew to LA for $75 during the pandemic.
the
I
heck?
can understand that that'll never happen again. That was an unprecedented
What is
time.
this?
So I guess I'd rather take the world as it is now than the world back then. But we will leave it there. Great airline discussion. Renita Young,
There are
senior
2 of
markets
us in here.
correspondent here for the network. Coming up next, we'll look at Redfin, though, as one analyst does feel more optimistic on this name after its pullback. Shares lower 3% today, though. George Tills will have more on that story coming up next.
$425.80, there's a gap. Where is this gap? Small gap? I don't see a gap until 418. Even on the 10-minute, I don't see anything till 418. Anyway, had the RSI divergence, had the move up to VWAP, and that was it. See, what did I close out up? I didn't close a good amount up here. Problem is I got back into them too soon. We're still in this channel. Stuck in this channel. Thought we were breaking out. Too quick. Too soon, Junior. $150. You know how it likes to do crazy moves at 2. Find more. Just have to be out of these quick. Some of them. Not expect a full cup to form today. Nice bounce on the bottom of that channel though. I'm just a little late to catch it. Like yesterday I was trading back and forth from, I don't know, like 1 o'clock. I started to today here, I just didn't flip bearish quick enough. I'm gonna force my bullishness on it. I guess because my trading account's down on the day, so I'm just sitting on those calls. There's a bounce at the bottom of the channel. Take profits at the top and flip to puts. We'll see. It's just getting closer to the end of the day. We should get moves happening a little faster out of the midday chop.
You wish to find a better deal when it comes to transaction costs or
And those
brokerage
crazy
fees,
liquidity
but
spikes.
also an advertising based model as well. Their website, they also advertise and get revenues from connecting to professional services associated with the home, like home repair, insurance, and so forth. But the challenge right now in the home market, there's lots of them. Obviously, interest rates are high. The demand is still firm. Prices are still very high, but the volumes are down. And that's the problem for the brokerage companies. They really rely on volumes, even if prices are low or even if they're high. As long as interest rates are low and transaction volume is high, they generate growing revenue.
Yeah, I
And that's
don't
been the challenge
count
for
those as
Redfin,
caps.
Zillow, and the
Extended
other
hours.
real estate companies. If you talk to realtors or even mortgage
An
brokers,
air gap, yeah.
they're
Lack of volume in
basically,
a certain
coming
area.
out from the standpoint of having less to do. Many of them lost their jobs in the
Well,
last
we
year and a half.
I feel like
At
we've
the same
kind of been in
time,
that
you just
gap
gotta look
ever
at
since we
pending
broke the
home
support on
sales.
that
This is the
cup,
most recent
that inverse
housing
cup.
data came out not too long ago, down 13% in terms of transactions. Existing home sales are relatively mute right now.
Yeah, I
I don't
wasn't
see
looking
many
at extended
listings
hours. I
or
don't
offerings, at
count
least
those
on
as
the existing
gaps
home front,
that
but
need
new
to be
home
filled at
sales
least.
are still firm. So right now there's a
You can just look at the
disparity
futures
between,
and see.
who's benefiting versus not.
There are no
Home builders
gaps.
obviously are benefiting. They're bringing
Except
additional
for on
supply to the
Sunday.
marketplace, especially starter
Or
homes.
Friday to Sunday, I
Existing
guess.
homeowners who locked in lower mortgage rates are benefiting. But I think the brokerage services are not. And of course, home buyers who are looking to get in a home obviously are facing structural challenges right now as well. And you have to think about interest rates. I don't necessarily agree with raising rates any additional amount going further, at least contingent upon inflation data that we have. But I don't think interest rates are going to come down either
What the
anytime
heck?
soon. I think going into next year, interest rates are going to remain firm because core inflation is stubbornly high still, and it's going to take some time for it to come down. So all you got to do is look at Redfin too to kind of confirm this. Their guidance based on next year's sales is about 1.1 billion. Keep in mind that's about 55% lower than last year, or at least in the trailing 12 months where they generated 2.28 billion. And even in 2024, they're expecting only 1.15 billion. So this year they're expecting 50% less, and next year very incremental increase in sales growth. So they're telling us something just based on their sales guidance.
Yeah, and George, I think that this is such a good point because you'd think, looking at home builders, like a name like this is killing it, but I think these are more longer-term issues that we need to keep on the radar when looking at a Redfin or even like a Zillow, for example, just given some of the major issues that they've just sort of scaped by with this 60% rally this year. But we will leave it there. Really great breakdown on what is such an interesting and still red-hot space. George Tillis, senior markets correspondent for the network. And that also does it for Alex and myself for Next Gen Investing.
What I'm doing different today is
Next, we have the watch list
that I didn't do yesterday. Or I didn't do today that I was doing yesterday is taking profits and setting stops for the rest of them at break even. That saves me pretty often. Start to just try and mainly control all of it, and I just start spiraling. Oh, good. With that, I'm going to take some profit here. Wash sale on here is super annoying. These options, I figure out my cost basis on my re-entry. Gotta turn off that. Gosh, that's funny. Okay, spiking up some more here. I gotta turn off the wash sale thing. That's so annoying. I gotta stop trading on Fidelity. It's like the Stone Age. Bob Clay's acquisition of TD 2020. What? I thought that would, like, just happened. Oh, who did Schwab just... Yeah, the Schwab. We're now watching Schwab Network instead of Trader TV, which was TD Ameritrade. I think that just happened. Or maybe they just changed over the program. just now migrated. Yeah, even my E-Trade. Who's E-Trade now? Morgan Stanley now owns E-Trade. Is that right? Like that.
Here we're looking at the dollar gaining slightly, 105.86. Gold 19.19 a troy ounce. Oil up about $1.90.65, still holding that $90 level. And Bitcoin futures at 26,170. And truthfully, I should have requested the VIX today because really it's jumping over 7% just in these 2 days trading, or at least now above the level of 18 at 18.50.
Making some more profits there.
We have some of the big market stories for you. Caroline Owens here, standing by, senior markets correspondent.
I gotta transfer out of this.
And this is the very latest
It was
Amazon
just
dropping.
insane.
The latest few hours, the antitrust suit from the FTC. What are you watching when it comes to this?
This has been long awaited. We've been really waiting for this for quite some time, but the Federal Trade Commission officially filed its lawsuit against Amazon. The FTC
Could
in
just be a little
17 states actually are suing Amazon, alleging it of illegally exercising monopoly power, monopolistic practices, alleging that Amazon inflates prices, locks sellers into its platforms, and also harms its rivals. The lawsuit alleges that Amazon violated antitrust lawsuits by anti-discounting measures that basically
I had to go into my order book, change my stop
on
loss
other sites.
because I had an order out already because I couldn't close any positions because I already had an order, stop loss order. To change that to a market order,
everyone wants the
makes a
prime
quantity.
option because things ship faster. Also, just in terms of some of
It's
these
not meant for
allegations,
trading.
saying these tactics have
Well.
stifled innovation, degraded the shopping experience on Amazon,
Wow.
and forced sellers to pay expensive fees to market their goods on the site while facing no other choice but to rely on Amazon to stay in business. Now, Amazon, different story. The general counsel there basically said in a statement, the FTC's complaint is wrong on the facts and the law, and we look forward to making the case in court. So if you take a look at Amazon shares today, they were already lower before this lawsuit was filed. They're down about 3.5% right now, down more than 8%
Want that straight
so
to get
far
there.
in
Dang it.
September. But if you take a look at the rest of the Mag 7,
Give it straight.
all but Meta
Oh,
are
see you.
lower. So, really it's not a lone loser in the space, but it's definitely
I was gonna
probably adding
check there, but
to,
that straight was
pressure
getting
on
there.
shares
I
today.
didn't
And
need
I
to
know
slow
you're gonna
play
be
'em.
talking about this a bit
A
later in
raisey
the show to
re-raise.
get some analysis on it, but certainly long awaited. Just be a matter of what happens in court.
Yeah, and it's interesting because when Amazon had the first FTC sort of probe and that investigation, and they found that people were getting signed up for Prime and then couldn't get out, wasn't that what it was? Something like that. And at that time, analysts were saying, just wait. This is the least of the problems. We're going to hear a lot more from the FTC concerning Amazon.
I think one of the allegations is too that once you sign up, it's hard to cancel.
That's
Prime, and I will say that I don't know. I feel like that's everything I ever sign up for. You have to go to the website. You can't do it from the app. I'm not even sure if that's the case for Prime because I rely on it so much. I've never tried to cancel it, but I do think that that's the case for so many of these services that we use. And I think the other thing to consider is Amazon's not the only retailer in e-commerce that people use. I mean, it's up against Target.com, Walmart.com. So, it's certainly not, the only retailer in the way that you would think of a typical monopoly. So it'll be interesting to see how this plays out.
Yeah, and I saw moments ago the judge is actually a judge that was nominated by President Reagan. I don't know where that fits in exactly into the story, but I thought it was a good tidbit. In the meantime, Rivian, some good news on the deliveries there and some good calls. It's up over 5%.
Yes, well, there's a forecast that deliveries will actually top expectations. We haven't seen the Q3 deliveries just yet, but Q3 is obviously wrapping up. Rivian getting ready to report those, but shares are up about 5.5% today after being called a bullish fresh pick at Baird ahead of those Q3 delivery numbers. The stock has been hit pretty hard based on third-party reports of weakening demand, but Baird says that their underlying demand remains strong and production is improving. The consensus for the delivery number is around 14,000 for Q3, so Baird thinks that number will come in higher for
Rivian also says that an inflection point for Rivian could come next year when it gives more details about its planned R2 production platform, as well as upgrading the production capacity for its existing R1 factory. So they have a $30 price target on Rivian shares. It's currently trading around
Rivian is just
22.26,
so overvalued.
there, an outperform rating. Now, interestingly enough,
7
the
cents
same Baird
on
analyst
barbecue.
is forecasting Tesla to deliver 439,200 vehicles for Q3. That's down 6% from the prior quarter and actually below consensus, which is above 460,000. That being said, they're still Tesla bulls, still have an outperform rating, $300 price target, and continues to believe that it's best positioned among its peers and a top pick for the second half of 2023. So expects Rivian to beat, but Tesla to miss
What that guy
when it
have?
comes to those delivery numbers.
That's very interesting. I mean, does that
Two
mean,
pair?
would one
Yes.
surmise that, Rivian is taking some market share from Tesla? You know what I mean?
Yeah, and I think Tesla too also has been dealing with some
Taking
factory
market share.
shutdowns and obviously a bigger scale, that type of thing. But he thinks both companies should be in your portfolio.
Thank you so much.
No, my
Caroline Woods.
deposit failed.
Good to see you. Thanks,
And
Caroline.
then,
Okay, let's take a look at
actually,
the
yeah, let me check it now.
with us, CEO and partner at Curo
And then I
Private
had to
Wealth.
try. I was like,
Thank
oh,
you,
okay,
Ann,
maybe
for
that's the
being
sign.
here.
Maybe I shouldn't.
What do you think we're seeing here
Maybe the
in this market?
50,000 or whatever I've
Once
lost
again,
on barbecue is enough. I don't need to throw in another
one day
1,000.
out of 6 trading days. I know
Pull
this is
that
traditionally a tough
slot
time.
machine lever again.
Yeah, great to see you, Nicole. Thanks for having
But
me back. It's been
anyways, then
just a brutal few
I figured
days
out how to
in
get a
the market,
deposit, so I deposited
especially
some.
today. And we've seen the S&P sell off about, I guess with today's
Closing
losses,
some more calls
roughly
here.
over 7% off the peak. We're still up roughly 12% on the S&P 500. And I think it's important to remember that since 1980, the average intra-year sell-off on the S&P has been about 14%. So we're nowhere near that amount, and I don't think we need to freak out yet. But what investors are concerned about, as has been widely talked about, is the Fed meeting.
Yeah, anyways, I got some deposited, and I tried
the increased and
to
continued hawkish
hold some more
tone.
there.
And we gleaned some interesting insights from that
I think
meeting
we're gonna keep
last
coming
week,
down. I
and
mean, might
mainly
maybe
that the
bounce
Fed
again
is
off this channel. I don't
expecting a
know.
soft landing.
Got a little head and shoulders
And,
up here on
Chairman
this.
Powell was careful to come out
Bounce
in
already
a
off
press
the channel.
conference and say, no, that's not what we're saying.
I wasn't. Yeah, I
But if
wasn't
you
able
look at
to
the
buy it.
changes
I'll try
to
again
the
today. Let me
dot
see.
plot from June to September, that's exactly
And I
what
would
it
have had
looks
the Bessie
like
in there
they're saying
probably.
anyway. They increased expectations for GDP growth, and they took away 2 rate cuts next year, so about 0.5 percentage point of rate cuts next year, another 0.5 percentage point
if I
of
can
rate
buy it.
cuts in 2025, and they're projecting for rates to be higher in the end of 2026 than where they see the long-term rate landing. So this hawkish tone has really spooked the stock market. We've seen yields on treasury bonds just go up precipitously and incredibly quickly. We saw the 10-year treasury yield hit the highest level we've seen since October of 2007, which is almost 16 years.
Right. So at this point now, if this is sort of your, mentality on the market, a pullback
It says air.
could
Please
be a
try
buying
again later.
opportunity. And what
On
would you
Moomoo.
say
I
might
don't
be
know.
a good buy?
Yeah, we definitely do see it as a
Not
buying
tried on
opportunity
the
for long-term investors. We're also taking this
Thinker
opportunity
Slim.
to remind
I
our
don't think so.
clients
I don't think it's
that
let me do that for a
the
while.
future does not typically turn out exactly the way the Fed predicts. So case in point, if you go back to December of 2021, the Fed was expecting for the Fed funds rate
I think
to
since it went on
land
to
at the end of 2022
expert, you
between
haven't been able to buy
75
on Thinker
basis
Slim.
points and 100 basis points. We now know what happened to interest rates
Yeah.
in 2022, right? They
Can't
went
buy it
up
on
a
Thinker
lot
Slim.
more. We ended the year at between 425 and 450 basis points. If you go back to December of 2020, that was still when we were
Give me
deep
down
in the trench of the
3.6.
COVID-induced recession. Most Fed officials were expecting rates would be close to zero
Get out
at
of
the
this
end
table.
of 2023. This was when they were saying inflation was transitory. So keep in mind, I know the Fed has a very tough job to do, but their track record is not great. So as investors, it's very important that we not make our decisions
just fold the
based
boat?
solely on what the Fed is predicting and their crystal ball. For long-term investors, we really
Yeah, because I can't buy it on
to
Thinkorswim. I
look
can't
at
buy it on
value and to look at some more quality
Moomoo.
names, because
Can't buy it
we do
anywhere.
absolutely expect that the economy will at some point go into a recession. So we think good quality, good earnings, good profit
All right, I'm out of the rest of
is
those
the
calls.
way to look for adding
Little profit on them.
positions to your portfolio.
Not the
moving
bounce I was
forward.
looking for yet.
Yeah. What you think of GME?
Will probably happen in power hour, maybe just very end of the day.
But just more your thoughts on the big picture and how people are receiving a higher rate environment where, you know, he said the world's not ready for 7% Fed rates. The VIX has spiked up to over a level of 18, and the markets have sold off, and there's just still now rate worry jitters. Your thoughts on the big picture on the world of rates and how high can they go, should go?
Yeah, I'm honored to be in the same sentence as Jamie Dimon, so thank you for the question. One of the things we're paying close attention to is the U.S. consumer, because the economy has been incredibly resilient so far this year. And one of the reasons is because we've had a very strong U.S. consumer. But
yeah, it looks like it's going to keep coming down here.
Consumer, and I agree with Jamie.
I'm not going to get put, so I just,
prepared and we can't sustain
I don't like the risk reward again.
Interest
so
rate
maybe to my demise.
We've seen savings come down for
we'll
consumers.
See. Breaks this channel.
We've seen credit card usage increase. We've
dumpy.
seen defaults increase
Dumpy fleshy.
on both credit cards as well as car loans, and student loan repayments are starting here in October. So we think all of this is going to get potentially even worse. Consumer confidence has came down about 8 points in August. We'll get another reading on that tomorrow, and we think it will decrease again. Then you pile on top of that the noise that we're dealing with the potential U.S. government shutdown, which we think is likely. Gas prices are higher. So all of this to say that we think the U.S. consumer is not going to save the economy the way that it has so far this year. And we're not prepared for a higher interest rate environment. It's definitely going to be tough.
Right, understood. Thank you so much. I mean, it really is great to see you. Any final thoughts here about any other investments or advice to investors today?
Yeah, I would just say I've reiterated this many times so far this year. If you are a long-term investor, try to keep your eye on the long-term prize. Try not to get too caught up in the short-term volatility.
Our reversal, maybe.
If you have needs,
at least the bounce, I would assume.
For investments, they should be in cash in the short term anyway. So just try to keep a long-term view. Try to keep your calm and take advantage of volatility. That's the market on sale. So you would take advantage of any other market on sale, do so with great companies, with stocks as well.
All right. And McCabe, Curo Private Wealth, thank you.
Thanks, Nicole.
Coming up next, it is Technical Tuesday. Kevin Horner is standing by.
Tackling fuel.
He joins us next, and he'll explain why he thinks McDonald's is certainly a stock to watch. That and more. Schwab Network, we'll be right back.
Tackling fuel. Tackling fuel. I got a call. Three of a kind. I got a 8. I got a 8. Fold. Everybody fold. Yes. Pocket aces. Oh my gosh. Pocket queens. Stupid pocket 8s I called with. Yeah, get out of the table. Wait, you're not getting your chips back. I'll give some chips back. New low there on the day for SPY. Back down to the bottom of that channel. Guy wants he's pissed. A little bounce. It's not like not seeing any reversals yet. You have a RSI divergence there. I'll get some calls. It is showing support back on that bottom channel too. But you're contrarian today. At least yesterday I'd flipped to puts when I needed to. Today I'm just I did run puts for a bit, but look at those twos. Its buys down almost 1.5%. Bouncing on that channel, but it's not showing a rounding bottom because it keeps retesting that. You know what I mean? Like this low could be lower, but actually not good. Calls are probably might work, but it was probably not a good idea to get calls there, honestly. Bet. Whoops. That's what I wanted to bet. Another bounce on the bottom of the channel. I'll add my calls if we break to the upside. Close these. break the channel, which will probably be short-lived, but gotta respect it. Yeah, we have an RSI divergence there on the 5-minute. So maybe it bounced up to resistance. A break on that channel, but that's pretty close. I'll add to some calls there. Oh, I think I got filled right on that big green candle. Thanks a lot. Dang it. The last card I wanted. Flushing out in spades. $224. I didn't wait till end of day again, watch. $8.5, nice call. GME down 3.5. $425.81. Sure, that is the low of the day so far. My chart was a penny off also. Bye, not waking up yet. Maybe power hour push.
Also checking on the VIX, which is moving higher. Right now it's at 1866. And a lot of folks watch the VIX as the market's selling off. You can see, if you looked at a long-term chart, you would see this sort of volatility, and it took a little breather for a while and has now jumped back up, this surge here at 1867. And last but not least, the US dollar has moved to the highest levels since November, and that too is something folks watch, and that could pressure commodities and multinationals, and it says moving higher. It's at 105.94. In the meantime, we're watching the Magnificent Seven player Amazon. The FTC
30 cents lower?
filed
A spy?
an antitrust lawsuit against Amazon for illegally maintaining monopoly power. And I want to get some more details on this. James Chernowski is with us, Senior Policy Analyst at Americans for Prosperity. Your thoughts on, I think there was a lot of anticipation. We knew the FTC was looking closely at Amazon. Is this a big charge? Is this a big deal to you?
Yeah, that's a great question, Nicole, and it's the question on everybody's mind right now. And I would say that this is obviously a landmark antitrust case. It's right up there with the other major antitrust case that's going on right now with the DOJ versus the Google company right now. That's one of the other big ones that's out there. But this is Lena Khan's kind of legacy-making case, if you will. She wrote a law paper famously about this exact situation when she was at Yale doing law school. And no surprise, now that she's in charge of the FTC, now this case has finally been brought forward. And the ramifications, depending on what comes out here, could actually significantly impact the company and potentially even the broader tech sector, more broadly speaking, too. So I think that there's a lot that's at stake here. And it's really just a more of the same from this FTC that's really been going aggressively against the tech sector since this administration came into power 2 years ago. And Lena Khan is emblematic of all of those actions.
Yeah, and so at this point, you have 17 state attorneys general filing, against Amazon. We already knew if Amazon had been under scrutiny because people were getting signed up for Prime, they weren't able to get out so easily. You sort of knew this was coming. And
I got
are
the
you
flush.
expecting more of the states to jump on board, and how long?
Dang, that took forever. Card dead for so long.
Right? Is it Amazon stock? Is it Amazon the way it does business? What are some of the
Good thing he had a
implications for
straight.
Amazon?
A two pair wouldn't have done
I
it.
think that ultimately we'll see what happens if more states choose to join on. If you look at the list that have joined on so far, it's largely been a bunch of Democrat
We'll see,
states
man.
that have certainly
Dance around
joined
this
that lawsuit with
little
the
bottom of this
FTC, with the
channel.
one exception being Oklahoma.
Hasn't
which
built
is
up
certainly more
much
of a
liquidity
Republican state.
to really
There's
do
always the
much down here.
possibility
Like
for more states to go and
maybe a
join
little
on. I think the
stop
biggest problem
hunt.
that they face right now with this FTC
But I'm not very
commissioner
bearish on
for
it.
this case is that they don't have any Republican commissioners that are serving on the commission right now.
Just wanna get more
And this was
calls.
a 3-0 decision by Democrats, and this is the FTC that's been winless in court so far with any of the decisions that they've come forward with, whether that's been the Activision and Microsoft trial, most recently Meta within merger. There's been a whole list. They've been winless so far. But again, should they prevail on any of this stuff,
I can wait for the momentum and the confirmation.
It can certainly impact Amazon's stock value because people won't know how to properly value the company if now all of a sudden Amazon has to restructure major parts of its business. That's a legitimate threat that the company does face. I imagine that by the time it's all said and done, this is going to take years to go and circulate through the court process because no matter what happens at the end of the day from this judge's decision, when this case is concluded, the losing party will almost certainly appeal to a higher court, and we'll just see a race to go and probably bring this up to the Supreme Court. So this is the kickoff of what should be a very highly touted antitrust case, just like the US v. Google case that I
going
brought
free
up
flash,
before.
110% bearish.
Yeah. What do you think? I mean, do you think they have the FTC? Is this sort of on point, or some of these sort of allegations in this investigation and
I don't know.
maybe off point? For example, they talk about monopolistic strategy.
Yeah, maybe for a very small little trade, but
they lock in sellers. They
you gotta
and that
weigh your risk to reward.
Have to use Amazon logistics if they want to be part of
down
Prime.
1.5 and it hasn't had a pump. It had a pump.
Monopolistic, or is it
high of the channel, bearish, but
like a gray area?
We keep respecting that as support.
Yeah, I would say that I look at this
Without
as
a big
perfectly acceptable business activity more often than not.
I don't see it as much.
Are not forced to go and be with Amazon per se. There are alternatives out there that the company, that the sellers can go and use if they don't want to use Amazon in and of itself. I think that really what happens here is that the FTC is misjudging the marketplace more broadly speaking. And I know that outlets like the Wall Street Journal, and I know certainly even your show has gone over some other competitors like Shopify and even Walmart and how they've gone and grown in the e-commerce space. Target's been a big player there over the last several years too. Let's not pretend that, Amazon has a dominant strategy here. One of the beautiful things about the tech sector of the United States economy is that you have a mandate to either innovate or become irrelevant. And Amazon's always been at the top end of that bunch, trying to always innovate and bring new products and services to people that they actually like and enjoy. And make no mistake, even for the seller, it's a win for you too, because if you were a small business prior to the advent of the internet, your reach and your ability to become something bigger than when you otherwise were was actually kind of limited. But now with the internet, you actually have, and having companies like Amazon and Shopify out there, you can go and reach more consumers than what was previously possible, which means that you have more opportunities in front of you. And what the FTC is seemingly trying to do here is put the interests of would-be competitors of Amazon over the interests of the consumers, the 200 million global people that use Prime services around the world and have actually enjoyed those services quite effectively over the last several years, myself included. I love Amazon Prime. I've been using it since I was in college. Again, I think a lot of the conduct here is missing context. I think it's going to be something that's worth watching and monitoring because, again, as we have said, the implications here of any decisions
Take a break. Broke that channel. I'm done averaging it now.
The rest of the tech
Good.
sector more
Got a good
broadly
amount.
speaking too.
Yeah, and obviously the government is doing a lot. The DOJ and Google. You have the FTC here and Amazon. How would a government shutdown?
And wicked back below it.
I mean, we're expecting that we're going to be talking about this. You could even see a slower economy. Where does that fit into this probe?
Yeah, I think it actually hits the nail on the head insofar as just showing how the government's focusing on the wrong things. I think that many people want to see the government avoid a shutdown if at all possible.
Look at that, rejecting
we'll
it.
see
Wow.
what happens on that front. And
Wedging right down here at the bottom.
What consumers are looking for, what are the top issues on their minds as we're heading into this upcoming election cycle in 2024, as it's consistently been throughout the entire presidency of this administration. It's been inflation, which has remained sticky, even though it's come down since its highs. It's still remaining sticky and having a sluggish effect on our economic growth as a nation too. So I think that, when you're coupling those two things, when the government's going after our most successful sector of the economy, that has certainly helped with keeping prices lower than they otherwise would be. It seems like there's just being a misprioritization here, and that Americans stand to lose when the government's not focusing on just trying to deliver results to people on the issues that they care about, like solving this inflation issue that's resulted in them paying thousands of dollars more per year than they did underneath previous years. And I think that, again, that's not something that we want to see happen. We want to see strong economic growth, empower powering innovation, and you're seeing a lot of investments in emerging technologies like AI. You could see, decisions here with this antitrust
closing
case,
one
maybe
more
even
of my
hinder the
January
development of that
puts.
emerging technology in and of itself, because this notion of big is bad that the FTC is pursuing will go and clamp down these companies' incentives to actually want to invest in these technologies out of fear of the scrutiny. So more of the same here.
And just quickly, I always like when things are bipartisan. In this case, do you think that they're being targeted? Is it a bit of a witch hunt? You do have a majority of Democrat states, the attorneys general, that are in on this. You talked about Lena Khan's Yale paper. Without leaning one way or the other, do you feel like this could be somewhat of a political story?
Oh, absolutely, Nicole. I think that it's completely fair to say that this could be political. As I noted at the outset, Lena Khan wrote her paper on this exact topic of wanting to break up Amazon. So it's hard to ignore. And, right now, politically speaking, it is sexy to go and chase the headlines of targeting the technology companies. So it's not surprising to see the FTC go and put their energy and resources into going after this sector. And make no mistake, it's not just Amazon, it's Google, it's Meta, it's Microsoft, it's NVIDIA. It's all of these companies that are trying to go and power our economy into this next generation that will be powered a lot by AI technology, and they're going after them explicitly for that. Nothing other than that they're successful and that they're big companies. So it's really unfortunate to see, in my opinion.
Yeah, understood. James Chernowski, great to see you. Americans for Prosperity. Appreciate it. Thanks, James. All right. Real estate. We're going to take a look at the latest trends that we are seeing in residential real estate, commercial real estate, and what this high rate environment, which is higher for longer, what does it mean for 2024?
I didn't think I was going to get opportunity to sell more of these. That's why the scale's nice. I'll wait for a bounce, reload. Maybe after this week's economic data, we'll get that. We'll get that pullback back to some moving averages. A nice new entry to reshort. Okay. Breaking up above the channel again here. Negative 0.5% pH. Hmm? A little retest on the channel. Oh, new low on the day. Is that enough for a dump and rip? Breaking below the channel. Yeah, there's a break of that channel. That's the channel we set up all day. But false breakouts happen. Being this late in the day and this low on the day, I'm probably not gonna take that as a sign to it's gonna keep flushing now. Minutes till power hour. Could still do a lot. Last hour and 20 minutes.
I think this is it, guys.
Oh. These green candles better be huge. It's really hanging out below there, though. That's not very good. Waiting for power hour. That CNS close. Settle all those orders.
Higher. I mean, what do you expect from these home builders going forward? Because, for example, when you look at building permits, there are a lot of permits that have been happening lately.
Yeah, well, so in that conversation that I had with my buddy, he was telling me that cement prices are still very, very high, but lumber is starting to come down. And again, this is seasonal, right? So this is the season when things start slowing down for them. But come January 2024, during Super Bowl time,
should leave his table, go to another one.
Picking up again.
Yeah, you know, you have have a Fed that has been very
So car
aggressive,
dead in there.
right? When you look at the trajectory, and you have Jamie Dimon saying, look, if we go, when you go to from 5% to 7%, that it's pretty tough on businesses. I mean, what say you? Are you hoping rates sort of stop here and there's no more rate hikes? What do you think the Fed will do?
Oh man, we really hope that the rate hikes kind of slow down or stop right here. But we as a company, what we're doing is we're transitioning and buying assets all cash, right? We don't want to be in a position to have negative leverage by having a high interest rate. So we'll continue to
Ace's
buy
call,
our assets all cash.
or
and then
everybody.
At some point, we're only using 3-year debt. At some point, hopefully to refinance when interest rates start getting under control.
Are there any hot topics in the world of real estate? I mean, in New York City, one is who gets the casino license, for example, right? They have the battle of the developers there. What kind of hot topics do you follow when it comes to what's going on in the real estate market?
Well, so for us, it's senior housing, assisted living, and memory care. Back in the pandemic times, occupancies were in the 80% range. Today, now they're like 87% range. And basically right now, there's no new product coming online. So because of no new product coming online, because occupancy rates are going up, that means yields are going up. So we see that senior housing for the remaining 2023 and beyond to be strong. So that's the darling that we're focusing on when it comes to commercial real estate.
Yeah, pretty amazing.
Some better hands.
Ed Fernandez, President and CEO, 1031 Crowdfunding. Great to see you. Really appreciate it.
You too. Thank you. Love your jacket.
Thanks. Thanks. I love you too. We're twinning. Thanks. Still ahead,
What'd she say?
we bring in our panel to discuss consumer sentiment. And, you know, we just got in our consumer confidence, and that's been relatively low. So let's get some interpretation here. Our panel is ready.
Gotta call that. Too glorious. I got the straight. Not gonna believe me. Oh, is there a straight flush? No, there's not a straight flush. Those guys had nothing. What the heck? Oh, that's good though, because they thought I was bluffing the last time, so they're trying to call my bluff. I love it. There's a new low on SPY. Probably not going to sell these calls now. Not with what's going on here. I think I'll get a better exit. Not guaranteed, but quite likely. Minutes to power hour. Little green candle starting to wake up. Twinning? Did sound like she said twinning. The heck? They have matching jackets. $2.9. Okay. And Buffer, huh? Spy's not ready. 9 minutes to power hour. That's straight. I'm gonna bluff heavier, but I have a straight and a flush out there. Yeah. Bye, man. Get that. Oh, there you go. There's a little flushy on Spy. What are we gonna hit before bounce? Reversal candle. Good first sign. Red to green. See how we close. Arenas. Candle closed red. But long wick down there. If you've not taken most of your profits on your puts, Bubba, if you had any, what are you holding for? Like, what kind of move? Where's your exit? I'm actually curious. You're just looking for a percentage on Spy. Did you just come up with that? Like, why 2%? Just to give yourself some kind of target? We are below the channel, so we could get some more flush before I think it probably will reverse. But it's just, yeah, I don't know. 20,000, whoops. 40,000, like it. Raise it again, 60,000. Yes. These are the best, these little raise battles. Get him to go all in. Just pisses these guys off. There's an all in. That's such a good way to get people to go all in. Oh my gosh, that was beautiful. I love the raise battles. I know, because I've been stuck in those before and it's so annoying. I just want to see the next cards. What do I have to do? All in? Momentum day, VIX holding high, big tech tapering. Well, the VIX probably hold high until it starts rallying, right? It's not just gonna start coming down. Typically. That little raise battle is amazing. I don't know if that happens with real money ever. Probably not. Maybe to some extent. Probably not as easy as it's in this. I don't keep doing it unless I would have the nuts on it. Like, if someone raised a small amount and I wanted to re-raise, I would re-raise, that's fine. But if they then re-raised, I most likely would call. I'll let it go. Oh my gosh. You guys probably don't have much either, they're just tilting a little bit. A lot of sixes today, am I? You're like my Oldham stats man. I mean, alright. Nope, now I'm out. Minutes per hour. What do we got? Just check yet. Nothing. Yeah, they're a little tilty over there in the west corner. Calls, spy? Yeah, I've got spy calls. I mean, it's a bit of a lotto because there's not any confirmation of a move to the upside. It's just risk reward to the upside is pretty great, so pretty much all you're really playing. We have seen some tapering on the bottom here too, even though it did break there. No, actually, I don't see much. Don't see much rounding out anymore. So really just a play on the channels. Re-raise. You guys doing it again, huh? I mean, I don't have like. I'll just call. Pretty bluffy though. I doubt he has two pair. Just call it down, I guess. I don't know. All in. He got there on the river? Oh wait, no, he was already there. He already had this straight, didn't he? The re-raise. I love the re-raise. Can't get a fold out of him. Is all in. Oh, I got a fold out of him. Nice. There's power hour. Market's not done anything. But you can kind of see it rounding out here. Gonna make us wait till Fugazi, isn't it? Oh snap. Red candle there on SPY. Volume looks like it's coming in. Here we go, 3 flush. I get these guys to fold more. Really don't like fold. Okay, let's put them all in. He probably has 2 pair, but he does like to bluff also. Didn't I put them all in? Ace 8, yeah, okay. That was a mistake. I should have put them all in on the turn. I guess he was calling because he thought for sure I bluffed that other hand that I did. Just didn't have a bluff catcher. And I wasn't bluffing. Eights. Red candle on SPY. Very just choppy down here. Bottom of the day. I mean... yeah. Just aggressive. Aggressive. Kramer's up 15%. It's held that trend really nice. I suppose dip buy would have made sense on there. After I sold it, I considered it, but I've stopped treating it, I guess. It's you raising again, huh? I'll get you to go all in when I have a good hand. R5 unsuited.
On the line, host of Fast Market. Okay, so the president shows up at the strikes. We knew this was going to happen. He put some commentary out there, and the stocks seem to respond here finally, Renita, as GM's down.
They're responding. So he's in full support of a 40% wage increase. Since the companies or the UAW members have asked for 40% wage increases, they've asked for 36. They brought it back a little bit. But the president's actually in a bind because his push for green energy, clean energy, actually threatens to take more jobs away.
Right.
And that's the thing that President Trump, former President Donald Trump, tomorrow will most likely talk about when he gets there.
It's a really tough spot. Elon Musk tweeting out that if the
Tens.
workers do what they want, it puts GM and Ford on the fast track to bankruptcy. I mean, I know they're competitors, but he doesn't really play around too much with that stuff in terms of like bloviation. I know Elon loves the memes and loves the goofy stuff on
and the
X.
drama.
Yeah, but when it comes to like numbers and cars, I think we can probably trust him at this point because Tesla's been crushing the competition.
It has been crushing the competition. And so he doesn't necessarily have a bone in this game.
Yeah, he's kind of already ahead.
He's already ahead.
Yeah.
And the next competitor behind him is not even that close up.
Yeah.
Okay, SPY's
GM and
coming up
Ford
here a little
finally
bit.
Responding to this on the chart, Kevin, do you think that makes sense now?
Nothing
I mean,
crazy
if
yet.
The president's also supporting
Volume's
the
still
workers here.
pretty
This
low.
can pressure the bottom line for these companies. I mean, we talked about it this morning. I've been surprised how strong these stocks have been.
Yeah, Oliver, you know, this is going to go down as a pretty historic day in terms of labor relations and unions and their relationship with politicians, because they're a contributor to the Biden administration. The Biden administration then goes in and backs them for a 40% rate hike. That is incredible in terms of the hyperbole there. Now, remember, we had comments from the Ford CEO a few weeks ago saying there's a line that they can't cross because it takes them, alluding to what Elon Musk said. There's only so much they can do before they start threatening the economic health of these companies.
Is this the same guy? Did he win a hand?
I think your Renita's point are spot on here. I think they have painted themselves into a corner between
Oh, it's got to be the same guy.
the rush to EVs that aren't ready to take over, you know, the entire U.S. economy, and
What in the world?
relationship he has with unionized labor. It's incongruous.
See some folds.
And it can't.
This must be the
last.
same guy.
Something's
Scared.
gotta give there. So the fact that, remember,
10 jack, nice. 10 ace, nice.
UPS
The 6.
settled their
Oh,
strike.
you got 2 pair
Everyone
back over there?
cheered the settlement of the strike. Then it hit the
Just glad I didn't go to this guy.
price tag of that strike, and UPS got hit hard after that. So this is going to be a historic day where the president of the United States joins a picket line, basically supporting labor like this. I've never seen it before in my life. It was 100 years ago when the Supreme Court ruled against a president.
This rally's been
to
very,
stay out
very
of labor
muted so
warfare.
far.
So unprecedented day.
9,
guys.
well done.
Yeah, General Motors down
Had a
2.5%
flush.
at $32. I mean, that is the low over the last 52 weeks. So when I say the stocks have been strong, I mean that they've held their lows. They haven't broken, but to your
Oh,
point,
no
Kevin,
re-raise. Look at you.
if the market sees this,
Must have a good hand.
the way it treated UPS, then the stock could be in a world of trouble if it does break through $32. Frankly, I'm surprised it hasn't already, but fine. That level's held. It's not the only story, by the way, about governments getting involved with companies. The other big decliner is Amazon, down 4%. And
Sure,
it
there's at
seems
least
like
one diamond out
after
there.
Many cases of antitrust rumors and various government investigations of big tech, Renita, the market's finally starting to care about this one with Amazon.
Oh, for sure. Amazon is.
Okay, you got a jack. Oh, ace 3.
States are suing Amazon for what they call doing monopoly.
How did we split it?
strategies
Oh.
and preventing rivals from fairly
Kickers don't
competing
matter.
against Amazon. So this complaint alleges that Amazon violates the law.
That's too bad.
Not necessarily
Too bad the
because
Full
it's
House
big,
game.
but because it
That'd
uses
been a nice
these
win.
exclusionary conduct, this exclusionary conduct, and it stops current competitors from being able to grow, and then future competitors from even being able to emerge. And so they claim that some of the actions include overcharging sellers, they include stifling innovation, they degrade quality for shoppers.
My
These
dailies are
pretty
basically
significant
worthless
claims
on
for
SPY.
the world's largest
Unless we get a
retail essential.
like VWAP rally or more, really.
Degrading quality
Fortunately.
for shoppers. I mean, I don't know. How much
But
better can it
on the
get?
backup
Click a
account,
button
I'm
that
trading
shows
tomorrow,
up at
so
your door.
you're much
Okay,
better
I
off.
don't know what they mean by that. We may want to get
Sure,
a little bit
yeah.
into the complaint to find more about it. But Amazon did respond to this. They say that the lawsuit is wrong on the facts and the law, and that the practices that the FTC is challenging are the very practices
just
that
play
help
along here.
spur competition and innovation across the
Let me go
retail
crazy.
industry. They say it's given greater selection, it's given lower prices and faster delivery speeds for Amazon customers. And they say it's also given more business opportunities for small business owners that want to sell in Amazon stores.
This is a really tough one to figure out how it's going to go because there's never been a company like this before.
There's a
especially on the notion
punt
of them
for sure.
prioritizing, according to the lawsuit,
Trying to get some
placement
folds, man.
And the sort of
Pocket sevens,
sponsorship
8
of
ace,
sellers who use
4 ace.
Amazon's delivery
Oh my
services
gosh, I got
because
this
they've
straight.
continued to lock in their
I
dominance.
think I
on the
lost
supply
overall,
chain.
though.
That's another reason UPS has been struggling, I think, Kevin, too. So, I mean, look,
What
I
did he
don't know.
have?
I mean, it seems like it kind of makes sense in some ways.
You have a
where
higher straight?
For the shopper's experience, you want to work with the sellers that are going
Yes.
to be able to get you the goods the fastest, and that might be using Amazon's supply chain. As far as the market
I don't
goes,
even know what
though,
happened
Kevin,
there.
Amazon down
I feel like I
4%.
lost
Kind of doesn't really matter
some
the rhyme
more
or the
than I-
reason why. We know the mathematical
I
effects
don't
on
know.
the index.
Negative 46. You're still holding puts, dude.
Announcement by the FTC on a day where the market
Gotta think
was
about all those blown
already
accounts,
weak
Bubba.
is very unfortunate because it probably facilitated Amazon going even lower. But remember, Amazon does two things and when they attack a business. They attack the middlemen and they attack high margins. If you have either of those, Amazon will eventually try to get into your business and manipulate that. But how do you
17% on Kramer.
I guess
Dang
the
it. It's
case
filling
they
the
can
gap.
make is that they're charging the third parties too much of a percentage for
I took profits on it. I didn't let it
into
stop
the
me out.
Amazon universe.
Probably would
But
have.
boy, this is going to be tricky.
Maybe would have gotten
You know,
stopped
the
at
FTC
anyways.
doesn't have a great track record in winning these cases. A lot of times they get settled for a fine.
I mean,
and
it's got a
no
beautiful
real,
chart. Just-
win involved here. So you know, this is going to be interesting how they play out. But this is a fundamental attack on Amazon. I'm sure they will defend themselves with everything they have, guys.
For sure. Also, I think really one of the first times where we can see antitrust litigation having a meaningful limit to a
I don't need
stock's
to keep
trajectory. Usually the market has
barreling
digested
down
these things, it's
chips.
moved through it, and it's kind of always taken the
Good.
side of the big cap companies. At this point, Amazon rejection hard from 140 bucks down to 125. Suddenly looks like the market very much cares.
Red candle
So a
there on
couple big
SPY.
stories here on,
15
how
minutes into
government
power hour.
get involved in these companies is perhaps timing-wise, not ideal. I mean, especially with the strike stuff, too. We're dealing with inflation and wage pressure, so we can expect more to come from that front. Appreciate Renita and Kevin. Thanks a lot for the assessment here of some of the big news items of the day. Let's bring in John Petrides, portfolio manager at Tocqueville Asset Management. John, it seems like the market environment here has taken a pretty distinct turn from 4 months ago when we were coming out of a bank crisis, feeling good about data beating expectations, everything going smoothly. Now suddenly we're dealing with a lot of the problems last year with some new wrinkles into it. How do we manage that as investors and traders?
Thanks, Oliver, for having me on. I think it's more like 4 weeks ago rather than 4 months ago. It's really turned on a dime when everyone came back from the summer holiday. But the interesting thing is how the narrative has changed on a dime to, you know, up until 2 or 3 weeks ago, or really the FOMC meeting last week, the narrative was, well, the Fed is nearing the end of its tightening cycle. And that's a good thing for stocks because eventually the economy will slow enough where the Fed will be able to reduce interest rates. And not really much has changed. The Fed basically said they will hike one more time this year. And next year they will cut interest rates. The only difference is that over the next 2
Just
years,
give it like you guy on the river.
The dot plot that the Fed has forecasting for interest rates is
Cockatoos,
about
what an
half of
awful
1
hand.
percentage point higher across the board, right? So the dot plot shows the Fed funds rate ending 2023 at 5.6% and ending 2025 at 3.9%. But Oliver, let's put this in perspective. You know, in September of 2021, the dot plot for 2 years from now was for the Fed funds rate to be at 1% in September of 2023.
Coming down
So,
a little bit, testing
meaning a lot's
channel
gonna happen
again.
in 2 years for the
Who
market
did
to start
that? That
forecasting
guy?
the Fed is going to cement in higher for longer.
Where do the labor strikes
There's a break on
and
that channel.
wage, potential changes come into
If we retest
play
the
here in
lows
this
again.
analysis, John? Because one of those key elements it seemed like that we were going to be able to avoid in the macro risks was the wage spiral. Even though the employment situation has been very robust and strong, we never really got
Expensive.
that real
Expensive
dangerous
hand. New low today
wage
they're on SPY.
type of spiral during inflation. But now it seems like the president is supporting unions. The wages are starting to move. This could have a pretty big implication symbolically. Does that factor into our inflation risks?
Well, yeah, I think wage growth, wage inflation has been north
AMC's
of 4%
turning up a
for
little
quite
bit.
some time now. At least since inflation has spiraled out over the past, call it 18 months or so. So wage inflation has definitely been there, and that's been part of the Fed conundrum because the job market has been solid for clearly. And I
Dude,
think
Ed
what
Queen.
we're seeing here is a bit of a rush on the unions to sort of lock in for their constituents because listen, if the economy weakens, the labor market is going to weaken, and the pricing power that employees have right now on wages is going to weaken, right? So they're trying to get while the getting's good. Let's not forget, this is not 1975. The percentage
There you go, Baba. There's your flush,
the
man.
US
Don't ever
employment
listen to me.
situation that's involved in
Who needs risk
unions is
management?
significantly less. So so the headlines are big. This is a big
Who cares about risk
moment
versus
for
reward?
the Biden campaign on the eve
Do it.
of for next year when they start the campaign hunt. But I would suspect that the underlying employment situation is going to start to weaken, and with that will be wages will come down.
Okay. To your point, if you were to look at like unionization and the number of participants in unions, yeah, it does. If you look at like a multi-decade, right, it's like it goes down, 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 but then
AMC is coming back with the
down, but
VWAP.
now it's kind of going the other way, and I guess that's kind of the question we have to figure out is whether
We
or not
are gonna
this
have to wait for
spurs
Fugazi, maybe.
other industries at the same time. But to your point, it might be a little bit of playing with fire if the economy's on edge.
Yeah.
So how much of it does just come down to watching that labor data?
Let's not forget, Oliver, employers don't, employees do, labor unions
That's 4%.
don't
You can
help
get out.
employers from a from a
realize
cost
some
standpoint.
gains.
And now that
Stop on the rest.
we are on the cusp here of artificial intelligence and AI, and the usage and the investment into AI is very real.
I'm all stocked up on calls.
You have to be careful because the more pressure there is on wages, the more pressure you could see companies pouring into capital expenditures to make more jobs, to outsource it to technology like artificial intelligence. So,
3 on
there
the
is an
turn-in river.
alternative that's developing to
Guess there's a
certain
flush out there.
forms of jobs that's real.
Pair of sevens.
Consumer-wise, what do you think, John?
Dude,
It seems
how would
like
I-
the consumers continue to be
They
very,
raised there.
very
I'm definitely
resilient.
folding.
So many things expected to break the back of the consumer. It hasn't. They've softened up a little bit. But a lot of these boogeymen people were looking for haven't quite delivered the major blow yet. Where do you see that going in the coming months?
Yeah, I think consumer discretionary is starting to become an attractive sector. All of these, all the factors that you just, you just laid out, we've been talking about forever. But the U.S. consumer seems to have been fairly resilient. But now we're at the point where gasoline prices are up higher. The amount of jobs added is slowing. The economy is slowing. mortgage rates north of 7% is going to have an impact on the housing market.
Interesting.
And things like that. And loan growth is slowing. So the economy is clearly slowing, which is clearly a headwind to the U.S. consumer. Plus, gasoline prices are higher. Plus, we know about student loan debt and all of those other factors. And, now you're starting to see really over the past 3 or 4 weeks, the consumer discretionary space has gotten destroyed. Some of the big box retailers are off a lot. You're seeing some of the pure retailers, the leisure are off a lot. And I think valuations there are starting to get attractive. And that's where I think our buy list is starting to grow within the retailer space.
Well, Target just took a leg lower literally in the moments that this show began, because they're going to have to close 9 stores along the West Coast, including San Francisco, because the crime is so bad. That's what they're saying, at least. I mean, that's pretty nuts.
I know a name like an Amazon, which we own for our clients, is under fire today.
The
shopping
play aggressive.
experience at some of these
I don't know.
stores
Be quicker to lose because
stinks right now. You have to go in. If you want a deodorant or something like that, you have to go ask somebody who has to come with a key, open the thing, and get it for you. And while you're waiting there, because they're short-staffed to begin with, you might as well take out your phone and order it online.
I'm with you there. Yeah.
So the
playing all right.
genie
Wait
is
for
out
good
of the
hands.
bottle here, and once you give the consumer,
No need to bluff on this table. It's playing very loose. Don't need to loosen anybody up.
Store and show
Just wait for the right hand. Take a big 3-4 way all in.
On your doorstep, T+1. It makes life. It just makes you less incentivized to go to the store.
Sounds like if you think Amazon can push back against the government, maybe a little.
Yeah, we're actually gonna wait till Fugazi. This is crazy.
I think it's attractive.
Well, I can close my calls 15 minutes after close, so it's very convenient. But given the market doesn't move usually a whole lot after hours without earnings or something.
Side of things. So,
which I don't think there's any earnings.
So, there's a lot going on there with the store.
These are actually tomorrow's. I could hold them.
Shots on goal. All right, thanks, John. Good convo. Appreciate the reaction to
but I probably won't.
Here this afternoon. John Petrides, Tocqueville Asset Management. All right, fairly optimistic still. Tone from John there, but a very realistic one about how some of the complications here could affect the stock market. Let's get a little bit more bearish.
Eyes below the channel.
Get straight into some trading as a chief strategist at Options Play. Tony, shots on goal.
Not much of a bounce at all yet.
Short in tech has been a pretty good place to be the last month. Looks like you're ready to fire again on Microsoft.
Yeah, that's exactly right. This comes on the back of my trade a couple of weeks ago on Apple. Really looking at these big tech names that are trading at pretty lofty valuations, given the fact that where 10-year yields are. And, since we've spoken last week, 10-year yields are up another 20, 30
New
basis
low
points.
on SPY.
So looking at this, when 10-year yields at a 4.5% environment, the valuations that these tech names are trading at are just hard to get your arms around. If you look at Microsoft, we're trading at 29 times forward earnings, and you look at what analysts are expecting, looking at about 11% EPS growth, which I think is fairly modest given the valuations that we're currently trading at. That was the same problem that I had with Apple. It's trading at 28 times earnings while expecting 9% EPS growth. And that's EPS growth in terms of analyst expectations that I think at this point is looking a little bit optimistic for next year. I think there's a good possibility that is likely going to slow down materially. Whether you're looking at consumer spending or looking at enterprise spending, there's certain signs of deceleration in both of those categories. And I think that when you take into account the interest rate environment, the valuations they're trading at, the fundamental picture here is not particularly attractive for net new long positions in these types of tech companies that have led this market rally. And then you look at the technical side here, you see Microsoft. And, Apple hasn't broken that 172 level, even though we're just trading against that support level here right now. But Microsoft earlier today broke that 320 support level. So you have some major support levels that are starting to break. Microsoft downside targets here to the downside, in my opinion, right now is still fairly modest, around 290 or so. Now that we've broken that 320 level, if we break 290, things really get ugly. But at least in the short run, in terms of Microsoft, I think the short-term target here to the downside is roughly 290. And I think that puts it, Microsoft back into that 26, 27 times forward earnings, which probably is a little bit more manageable in this type of interest rate environment, because it is still arguably one of the best performing tech names overall as an investor. So I don't think that this is the type of stock that, should be trading at 22, 23 times forward earnings.
And you're also not going straight for the short either. You're selling upside, right? Selling a call spread, call vertical.
Yeah, I did set this trade setup before we broke that 320 support level. The idea was that, this could break today, it could break 2 weeks from now. Right now, at the time, I think with the high implied volatility was to sell premium. Earlier today, I was looking at selling the November 3rd 320, 340 call spread. You would collect about $7.60.
I don't
today.
recognize that as a
If you were
gap.
to adjust this trade based
CJ.
on current prices, I would move those strike prices $10 lower to that 310, 330
Good,
put,
Bubba.
call spread. You can collect.
You're not going to make any money though until it's 2%. So
Wide credit spread at the moment. That's more than 40% of the vertical width, which is certainly very attractive. However, I will say the fact that we've
you got
broken that
0.4% left to go.
gives me more confidence to be outright short and being a bit more aggressive in my shorts, looking at buying some put spreads. But this is the same trade setup that I spoke about a couple of weeks ago with Apple, where we're selling upside call spread. And I said, if we break that 172 level, that's when I'd be getting more aggressive and buying puts.
Yeah.
Here's an example where Microsoft, when we were talking earlier today in the morning, I was selling call spreads saying that if we break 320, I'd be buying put spreads. And here in the afternoon, we're already at that point already.
Okay, so Microsoft, you're ready to even get more short. Apple, you're looking for full breakage to then, we're 171.68, so we're kind of borderline on that right now. But if we go down further, you think Apple's got room to go lower too?
Significantly lower on Apple, about 155 to the downside. Microsoft, I think
That's
about
painful.
290 to the downside right now.
Look at that flush on GME.
If Apple gets to
Down
155,
4.3.
You think you get better bang for your buck trading the stocks than the broad market in that case? Tony, might there be some other stuff that helps support the S&P if these companies break down, or is S&P toast if these trades work out?
I think that's a great question, but we really think of Microsoft and Apple nearly as proxies for the market. They trade at a slightly higher beta than the market, but from my perspective, either you're using this as a tactical short if you don't own Microsoft and Apple, but I would imagine most viewers here have some level of Microsoft and Apple exposure in their portfolios. So this could also be used as a potential hedge against stock that you own. But also, whether you use this as a hedge for the market or you use something like SPY or QQQ, the nature of the trades are very similar. The betas on these stocks relative to the market isn't too extreme. 1.2 on Apple versus obviously 0 for the or 1.0 for the market. So you can think of this either as a tactical short or as overall hedge for individual stock.
It is the same guy, isn't it?
As an overall portfolio hedge, in my opinion.
All right, good stuff. Like the context too about how to approach it versus the index, helpful. And a nice trade on Apple. We'll be watching Microsoft next for the breakage. Thanks, Tony. Options play. We get a little variety
I
on
don't.
how to approach trading.
Another diamond.
Big tech, as Tom found some bullish action in Apple and Microsoft, but something bearish in probably the stock that matters the most. There's Alex today. That's right. We got Alex.
At least someone's going to see it.
Nice.
A 7?
Right back.
This dude didn't even have a diamond. What are you doing? So easy to have a diamond there. 7 Jack. He had nothing, did he? I'm still playing with his chip, so no worries. Fix broke out, not selling. Not selling at all? You gonna exercise him? We're short on this SPY shares? 3:30. 30 minutes till close. Bears hardly built liquidity. Got one little move up the top of the channel at 1 o'clock. A nice flop. What? Why did it do 120,000? Okay, I'm gonna go all in here, watch. No, he doesn't have diamonds. A little min raise. Oh, he called? He knows that trick now. A 10. Please don't have a 10, sir. Oh my gosh, he probably doesn't. A king. See what I mean? I can play this game with him. I'm playing with his chips again. Oh, he actually left this time. He's like, wow, this guy raised when he had a good hand. That's crazy. It's freaking nuts. Below there on GME, 1689, down 4.4%. GME, the best front runner for SPY. Just kidding. Kind of. Little inverse head and shoulders here on the 1 minute. See if that right shoulder breaks.
The risk on this trade
feels a long ways away right now.
It does, and the risk on this trade is massive, but also think of the risk in terms of just how much capital's got to be set aside for this, because the risk
Well, it might be one of those days where it closed low.
At essentially 157.
Kind of makes me want to hold these calls. I think I might.
And then the 155 put is the assignment strike. So if it falls below 155, you're assigned at 155. If they go through that process, add 240 back into it. But $44,859,000
I don't know if it's worth it for the theta
associated with this. That would be your risk if the stock went to zero. No one's calling Apple to go to zero necessarily overnight or anytime soon, but you got to know that number.
Spades got there, dang it.
You're essentially going to own.
That's your in theory number. You know, like you're in school, it's like, all right, in theory, here's the limit. Like, you don't really approach it, hopefully. But
yeah,
that's important to keep in mind to kind of get the cost of the trade. It's a very bullish trade.
Here's a 5.
I think it does kind of speak to how
what?
maybe taking it back.
Up there, I got a full house.
Market breaks down further.
Oh, dang, this is beautiful.
This trade is already
I have the best hand.
performing pretty poorly.
What
I
would say
have
too
the
is
best
the
hand.
size of the trade. It's Apple. There's always going to be big.
It's highest full house, right?
But this is probably a fund
You'd have
manager
spades.
or a massive individual trader swinging their weight around. You
it's
don't
big
see
money.
$45 million trades
Bad
in
for those guys.
that many names.
Sure. All right.
It's so annoying you have such a good hand, then
Yeah, so
that happens.
comparably, directionally
Why?
in line, it's bullish as well. I would
Didn't
almost argue
failed
this is
that right
more
shoulder.
bullish, but it's way smaller, but way more
Most
speculative in
days.
some ways. So buying 4,824 of the October 27th weekly 325 calls. So they're just outright buying premium, and this premium's a good 5% above the current share price. So They
Probably
need
leave this
something
table.
to happen, and they need to happen in a relatively short amount of time because this goes out to the end of October. Granted, that's a month away, but a month when the market's wobbly like this, yeah, this thing could start swinging around. We could quickly get further and further away to the downside. But just outright, almost $3 million in premium being purchased. $2.894 million is the association. This, the limit, as you like to say it, theoretical max loss, this is in play. Because not only is this a scenario where you might lose it, if something doesn't happen, you will lose this full amount.
I mean, this is what happens when you do it at a debit, which is when you're owning a premium.
And when the premium is out of the money premium. So the break even is $3.31 because they're paying $6 debit for each one of these. So they don't even need just $3.25 by expiration. They need $3.31, which is even further away. I mean, now we're talking 6.5%, 7% from current share prices.
Okay, and it's 4,800 of these at $6.
48.24.
Okay, so it's like 24 million.
2.894.
Oh, okay, I see. I got you. Okay, all right. So this is much smaller.
Much smaller, but the full amount is at risk. So that's where I always the bigger trade in the first case, but the risk is I'm going to be a shareholder in Apple. Maybe that's what I want to have happen.
Right.
In the case of Microsoft, this either happens or I lose $3 million.
This is a speculative bet.
Yes.
The Apple one might have shares. They may want the shares. They might view it as kind of a win, less win of a situation. This is very clearly win or lose. You're putting a bet on that within a month Microsoft's going to rip. NVIDIA's your exception. You saw a bearish trade in NVIDIA. I'm actually kind of surprised because NVIDIA chart undoubtedly looks the best out of all of these
Indubitably.
right
now. This is where you have to kind of put your hat on and try to get into
Sure,
the
I'll
mind
see
of
if
the
there's
investor
hearts.
the best you can. Why would someone trade the way that they have in this case? They're buying 2,300 of the March of 2024 360 puts for a $21 debit. To me, this screams can't know for sure. Fund manager hedging a large stock position.
Pre-raiser.
The break even would be down at 339. It's about 20% below the current share price. But this is just under $5 million in premium,
Get a
$4.83
7
million
or 2.
in premium. But you look at the time
Or
going
king.
out to March of 2024. To me, this screams I maybe have this position. Maybe I got into it
Bouncing
around
up here a
that
little
time.
bit.
Maybe tax implications.
Long way to go for
maybe
VWAP.
NVIDIA has moved a lot this
Is
year.
that-
It's starting to show
that too
signs
ridiculous?
of wobbling a little bit. Maybe for peace of mind,
that's
maybe
nice.
for protection of gains, whatever it may be.
Pre-flop got
looks
lucky.
like a trader who's willing to put about $5 million, take that off the table here, $21, maybe hedge off a position. Contrary explanation. This is someone who believes this stock's going to move significantly lower. It's moved significantly higher this year, basically going 3-4x off of its lows. They don't know exactly when. This might be just an outright bet against the AI hype, the maybe speculative bubble that's built up in some of these names, and they expect that bubble may burst.
It's a pretty expensive trade if it's a speculative one. It makes a little bit more sense, I think, if you've got a ton of NVIDIA, maybe, like you mentioned before, or you're up on NVIDIA or something.
But even so, it's still bearish nonetheless because you're spending a bunch of money to protect something. You only protect something if you think it's going to go down.
If you're worried, yeah. It's interesting, that's what stood out because it still has higher lows, higher highs. The chart
Our options someday are going to make its way out of this show.
NVIDIA. Whereas the other ones, you could definitely argue, and Tony Zhang did, that Microsoft has broken down and is reversing.
Start trading more
Apple's on the
mega
precipice
cap
of it.
options.
NVIDIA still at least meets some of those technical standards of an uptrend. Nice, good finds there for us. Well done, Alex Coffey on the options corner coming up. Let's do some trading with Scott Bauer joining us. Take a look at the commodity sector, how it's responding to the strong dollar. Greenback not getting in the way of crude oil as WTI managed to find a bounce.
20 minutes left. 10 minutes
We'll get
Fugazi.
more
What do you
details on the
got?
stores are closing at Target from Jenny.
What do you got? Coming up here, back above, back in that channel now. Yeah, I like 8-6 suited. See? Put these guys all in. I guess he could have a straight. Dang it. Definitely could now. Gotta get some more people to fold. He's got a straight. He's got to. Everybody can't have a straight. Yay, nobody did. I got a full house. He's 4. Those guys had nothing. Pairs with kickers. I have 21 million at this table. That's hilarious. Max buy-in is 2.5. Slowly climbing up here. You guys might start tilting. He's raised, yeah. Definitely a little tilty. Maybe Fugazi will be good to me. Fugazi back to VWAP would be righteous.
Say the path of least resistance right now for the overall market is to the downside, and all of these trends are just continuing. I mean, it's unbelievable in the face of this dollar strength, what we're seeing, and with bonds selling off and rates going higher, that oil has been so steady grinding higher here. And I think that just tells us, Oliver, that right now the outlook at least is for greater demand. Maybe not so much more supply cuts, that could be a concern, but that the demand is still there.
Yeah, it's seemingly like the market is sending us some pretty loud signals that inflation is maybe getting untamed again, hard to control, crude up, rates up, in the middle of a stock sell-off. I mean, that's the type of environment when risk off, you might expect those two assets to go the opposite way. Crude go down with stocks and bonds to catch a bid.
Yeah, no doubt about it. In fact, a bunch of us were talking about this morning.
Just a little bigger green candle.
Bonds just, for yields.
Here you go, Fugazi.
Here, we're like,
get ready.
This just is not a good thing. I do think, again, this is the path of least resistance. We're in this period right now with just.
Too bad we could get this earlier in the day.
Major, but we
my
got
day
some
trading account
data this morning that, exacerbated.
Suffered today a little bit more than I wanted it to.
Aren't up here yet. We've got still some time. We've got 5 weeks until the next
good.
Fed. So we're in this lull period in the market. And, right now with the environment that we're in, this bearish environment, what are people doing? Well, it's a sell first and just kind of, close your eyes and go away.
Yeah. So what do we look for then to kind of know if this turns into a repeat of last year, Scott? What are the signs? Because right now, one can still argue we're holding some levels that need to hold. Apple hasn't broken down through 170. The list is getting long of technical tech trends under threat, but there's still a debate to be had about whether or not we're going to trend lower, right?
No doubt about it. And, last week we went below the 100-day moving average in the S&Ps. The 200-day, which I think is right around 4190 or so, that's not too far off. So maybe that's the next level. I think we have to keep in mind, though, Oliver, even though S&Ps are down about 7% from where they were in July, if you still look year to date, we're still up 11%. Now, not the gangbuster number that we had earlier, but given all of the major headwinds to this marketplace between rates, the dollar, the
5 queen, king queen, pocket 5s.
Political environment, if you will, with potential shutdown next week.
Wow, that red candle though.
Look at that and say,
15 minutes to close.
This is getting a little ugly right now, but overall, market's still really hanging in there.
Yeah. Scott, is there a trade that stands out to you right now with all the data coming in the next couple of days? Is it worth trying to get in front
Got a little cup here.
You know, another
Maybe
read
handle?
on GDP, inflation prints. There's a good bit to choose from here from the economy the next 48 hours.
Oh man, and you know there are so many stocks, and even some of the real big ones, where their RSIs are so oversold. But you know you're in an environment where you know you can't go into everything. So what stands out to me actually is looking at the small caps. You know, maybe the Russell. And if I was going to pick a sector that to me has the biggest potential of the biggest gain over the next 4 weeks, it's the Russell, because that has been so beaten up, even more so than the NASDAQ, you know, with some of the Magnificent Seven getting hammered. I really like the opportunity there. It does not come without risk. Again, this is a sell-first environment, so you got to use a quick stop. But, you know, if I were to put a trade on and just kind of fast forward and 4 weeks from now, look at the entire landscape and say, what's giving me the best upside? Might be those small caps.
All right, like that. Russell trying to outperform today, so there is some sign of that resilience hanging in there for the small caps. Thanks, Scott, for the check-in. Appreciate it.
You got it, Oliver. Thanks.
All right, let's talk about a big cap retailer that might be getting smaller by the moment here. Jenny Horn with the latest on Target, closing stores mostly along the West Coast. Seems like that was what I gained from the headline. Jenny Horn, take us through it.
Yeah, 9 store closures Target just announced today. Now, they are definitely, I'd say, dominating the West Coast, but they do have one store in New York City's Harlem location, as well as 2 locations in Seattle, 3 in San Francisco, and 3 more in Portland, Oregon. And they did cite specifically organized crime as well as theft and violence at these various locations that are expected to shut for good on October 21st. Now, they said in this news release, we cannot continue to operate these stores because theft and organized retail crime are threatening the safety of our team and our guests. And Target, which does operate around 2,000 stores in the United States, has been pretty transparent. This has been a major issue. They first cited this back in August of 2022, first time in their near 2-decade-long history as a company. And since, it's been mentioned on pretty much every earnings call. Actually, CEO Brian Cornell did say shrink overall is expected to reduce their full-year profitability by more than $500 million this year compared to last. Just to paint a picture of how massive of an issue this is for not only Target, but for several other retailers, saying they stand by their decision to shut these stores, explicitly
coming down some more here. I think it's maybe worth it for me to hold these calls.
People's jobs, people's livelihoods, which is something they did not exactly want to do, but feel is the right direction of the overall company. Now, a lot of other retailers are calling for the passage of this bill called Combating Organized Retail Crime Act, which would then propose stiffer penalties for some of these offenses and change some of the overall thresholds in which prosecutors must meet before then bringing some of these retail theft cases. Target did say in its news release earlier today that it's very supportive of this bill, and they do hope that right now there's more
capitulation at all, though.
Help them and as well as other retailers deal with what is a major issue, that being shrink, of course. Total shrink grew to $112 billion in fiscal 2022 versus just around $93 billion the year prior, but it's expected to worsen even more so this year. So, well, Target's not necessarily, I feel like we forget living in an urban area. 2,000 stores puts it on a relatively smaller scale.
I wondered,
9
well,
stores of 2,000
you got your
is
chips
significant
back. Well
for a
done.
company that's just hemorrhaging as far as its share price goes. I mean, new 52-week lows today. We're down about 26% this year, falling another 13% this month, really showing that in this environment and in this economy, a name like Walmart is incomparable at this point. Costco as well, which does report today after the close.
All right, inverse head and shoulders here.
Discretionary items,
See if it holds that right shoulder.
really shifting away from focusing on the need-be items.
10 minutes Fugazzi's here.
As well as consumer staples.
Wow.
So, tough environment for Target, but perhaps we could see other retailers follow suit on shrink, which has become the most interesting topic.
Fugazi gave a little flushy candle there.
Yeah, not what you want in an environment economically marked by employment resilience and surprising strength to have to shut down your discretionary retail outlets in big cities. These aren't podunk towns. San Francisco, Portland, Seattle, and then Harlem, New York, too, obviously servicing a big area of metropolitan New York. All right, shares down, and that makes sense to me. Thanks, Jenny Horn, for the update. Target making fresh new lows. When we come back, we've got our Charles Schwab big picture analysis ahead of a bunch of economic data the next 2 days, and, of course, higher yields.
Candle to green.
Stock sell-off, but we'll see how bonds do in the next 10 minutes here as Treasuries aren't able to get too far higher in yield as equities have been under pressure all day.
Thanks, Jay. Thanks, man. Appreciate it. GME down almost 5%. And nothing? What in the world? Alright, SPY made a cup, made a handle. Back up to the cup, see if we can break. 6 minutes to close. 5-minute finger slap coming in hot. There's a 5-minute. Oh. Six. They both had the 6. No bluffing. Nice kicker. Minutes. In the morning or Wednesday 27th. Durable goods at 8:30. Minutes. Still be kind of forming this cup. Not sure what I want to do. Probably close these. No need to risk it. Oh, come on, give me an all-in. Give me a re-raise. Oh, he had 2 pair also. Got lucky on that river. I wouldn't have bet as big if I didn't get the 2 pair. I see extended hours maybe. Sell 5 now. Half. Bounce after hours? No. I'll call that. Sell the other half now. Alright. Good L today. Yesterday was good. Today was bad. Equal each other out. I don't think so. Today was bigger L. Yesterday was a win, unfortunately. Trying to time the bottom. That is the problem with it. You can start with like smaller positions and then scale in as it confirms. I did that, I guess, and then I guess I just wanted to force trades when there just really wasn't a good setup. Even for the short, I didn't like it. The risk reward was stupid down here. Should have gotten more on that VWAP. Could have gotten into puts there, but on the macro, I've had a macro bullish bent the last 2 days, which has probably clouded my opportunities to go short. Once we get just the risk reward gets bad, just have a hard time going that directions. So, yep, still in this channel going downwards. Chase candle's pretty ugly too. Very ugly, closing pretty close to the lows. Just a little wick there on the bottom. Again, I do like to bounce though. Unless we get some maybe news catalyst. That's pretty bad. Should get a bounce. What do we have this morning? Remember? Yeah, because we gapped down this morning and sold off, which is more crazy. Thanks, James W. Thanks, Christopher. Continuation more likely than reversals. Is this continuation though? I guess on the macro it is, yeah. Like on the longer time frame. Yeah, I guess intraday it was too. Pretty much bearish channel all day. Yeah. Well, thanks guys. Thanks for your support. Appreciate it. See you on Discord. I'm not gonna read my trades. I'm pretty exhausted. I can tell you. I won't look at them, but didn't take this short in the morning. I was trying to be patient, but that was a nice position for it. Anyways, a couple longs, I think. Got out of some. Yeah, I kept trying to go bullish. Yeah, too much bias potentially today, and then didn't cut losses. I should have. Didn't do the stop loss trick because most of my trades were just going against me, so hard to do that. I closed out of all those. I did close out of some of the January SPY puts. Some more today. I think, yeah, nice opportunity to close some of that. Look for a move up to some moving averages. At least that's what I would expect. Anyways, thanks guys, appreciate it. See you on Discord. Good afternoon. Out.